Good morning, good afternoon, and good evening to the rest of you. We are back for another episode of Bitcoin Magazine Live. Is I, your host Q, coming to you live from my mother's basement yet again. I'm joined by my co-host P. How's it going, P?
It's going fantastic. Super excited to be here. Super excited to be talking with Joe.
And we are joined by our guest, none other than Joe Carlasare. Joe, how are you doing today, man?
I am doing fantastic. Thanks for having me on, guys.
We're excited to have you. We're excited to dive into this conversation. But first, it has been shared on Twitter that everyone can look forward to. What is this now? Part 3, or is it part 2 of the Jay Gould, Joe, Jeff Ross, and Preston Pish experience? How was that conversation when the four of you guys had a chance to sit down and rehash on everything going on in the world?
Oh, I love it because, you get into some of these rooms and you kind of have an echo chamber, but we've got 4 really smart guys. Hopefully I'm included in that group. And I just learned so much from all of them. We just chat, we debate, we discuss. I think it drops tomorrow. So check out Preston's podcast for that. It's going to be fun. I really enjoyed recording it. And we run the gamut. We go from economics to personal finance to the regulatory space, and we're all over the place. So it's good. It's good. It was a good episode. I love doing it with Preston and crew.
Man, I can't imagine a better group of people to just shoot the shit.
Oh,
that
yeah.
Sounds like
it
so
was
much fun.
It was a ton of fun, and it's really interesting to see where we diverge and where we agree. And yeah, I loved it.
What was like one surprising opinion that you shared that they were surprised by?
I think it was more of, we've kind of had this back and forth really going, where do markets go from here? Most people are really talking about how, this is really bad. This is really bearish. The Fed's tightening, they're draining liquidity from the system, and we're going down, and we're going down hard. And I think that's possible. It's probably the likely scenario if you're just, using probabilities at this point. But there is a case to be made that you get a counter trend rally. For many months now, Dr. Jeff Roth, for example, he's been very bearish on risk assets in general. And him and I were sort of the more bullish folks on the group, on the chat. We were saying, wait a second, even in the midst of the 2008 crisis, you had these mini, bear market rallies where the NASDAQ went up 22%. So the notion that it's down only at this point and we're only going to tank when it comes to the price, I think that might be a little bit premature. Dr. Jeff, he was probably the most bullish of the group at this point, saying that it's possible, emphasize on that word, that we could get a new all-time high in Bitcoin in August, I think was his target. But really, we had it. Yeah, that's what he said, which is for Jeff has been pretty bearish, right? That's kind of an amazing development.
I gave him so much shit for his bearish sentiment, but it hurts me to say this. He was clearly absolutely right.
Yeah, no, he was. He killed it, and Jay Gould as well. He was calling for lower lows, and it's really interesting because when you're in markets, when you're in the thick of it, there's so many different cross currents. There's so much different information that you got to sort out, and you always wonder yourself: are we being overly pessimistic? Or are we being overly optimistic? Or is the base case going to be just a bunch of ranging back and forth where we really don't have any clear signal? And I think there's good arguments to be made for all that. The bears obviously have a fantastic argument right now. The bulls have an argument that everybody's so bearish, right? Like the sentiment's so awful. So who hasn't sold at these prices? And then the ranging people, they had their argument like, look, we've been ranging effectively between 30 to 60K for like a year and a half now. What makes you think this is going to be any different? Maybe we'll break a little bit lower, but bounce up higher. Isn't this really just Bitcoin trying to find its foothold after the craziness that was late 2020 and 2021?
I'm curious, like I put a lot of weight on the correlation with the NASDAQ and the NASDAQ 100 in particular and Bitcoin. It feels like it trades like a tech asset. All the private money managers and private hedge funds don't necessarily have to disclose them buying and selling Bitcoin in the same way a publicly managed fund or a public company would have to do so. So I'm curious if this drawdown and draw up is correlated in your mind with how the stock market's going to be moving or public markets in general.
It's definitely correlated with public markets. But if you follow my Twitter feed, you'll see a strange chart that I tweet out regularly, probably to the annoyance of all the people that follow me. But I actually like to look at Bitcoin against the VIX. I like to look at Bitcoin against volatility, because I think that the notion that it's correlated with risk assets is actually a misnomer. It's confusing what the actual causation is. It's volatility. So when volatility picks up in public markets, Bitcoin tends to sell off. And you can look at this chart historically, go back all the way through 2015, 2016, almost to the day Bitcoin peaked in December of 2017. We had a record low on the VIX, which is the volatility index for the S&P 500. So what that's telling you is there's a very sort of complacent, it's a very comfortable market, very little volatility. Up into the right is the general path. And then when the VIX reverses, the algos and a lot of the bots and the traders, they're selling anything that's perceived as a risk asset. We all know Bitcoin's not a risk asset, right? But right now, the way it trades, unfortunately, with a lot of the institutional money, they sell the high beta, sell the high volatility stuff, which unfortunately includes Bitcoin. The really remarkable thing for me is the fact that, like, Bitcoin, in a very, very hostile, negative, volatile environment, it held in there for months now for the first part of 2022. That's really bullish in my mind. It's beginning to trade more like the blue chip NASDAQ stocks as opposed to the more speculative high beta ARK type names.
I'm curious then, like, obviously COVID was a big driver as to why the VIX hit levels just almost unprecedented. We
Right.
still haven't even come to 50% of that level. Do you think there's more room for the VIX to go, and as a result, based on this, more downside than in Bitcoin in the near term? Or are you kind of expecting the VIX to cool off, and as a result, Bitcoin to sort of have this opportunity to move up?
I think that you're going to have elevated volatility for the rest of this year. I think it's going to drive a lot of the traders just really annoyed. They're going to be annoyed by it. But keep in mind, volatility itself doesn't necessarily mean that it's all going down, right? Volatility can mean wild swings to the upside as well. But overall, to get a sustained rally, I think Bitcoin needs a lower VIX. That's generally what we've seen historically. Low periods of volatility have given Bitcoin really good price action. But to your point, like, where are we at in volatility? And I've been wrong about this for months, so just take it with a grain of salt, but I think that this is reaching peak fear, peak capitulation. Maybe we have another couple hundred points on the S&P 500 that we shed. Maybe Bitcoin peaks its head back down to 25, 26 again. But you're looking at levels here where I think you're close to a short-term bottom. Short-term bottom doesn't mean we can't pop up to the mid 30s and then sell back off for the rest of the year. But I think you're reaching sort of levels that you consistently sort of see at a short-term bottom.
And are you like, what is this moment's factor for the most volatility? We've seen everything from the president opening their mouth to sending a tweet to hearing about supply chain issues, or just one single boat being stuck in a canal to then causing the VIX to have like a single day spike. Are you expecting the markets to be this sort of tense still, and sort of any news goes, or is there a certain piece of news that you're expecting to have more of an effect right now on the general markets?
So the way I think about it is, think about financial markets like you're basically like a system where your heart is pumping blood, right? And your blood, okay, is the liquidity in the markets. So when when yields rise, when credit becomes more expensive, when you've got telegraph of the central bank pulling liquidity from the system in the form of QT that begins on June 1st, you're draining your blood supply, right? Your blood is not getting everywhere it needs to get in the financial markets. And what you tend to have is increased volatility. So the mere perception of tightening financial conditions is akin to lack of blood supply that can cause a stroke. And I think that's like the idea basically at its core of what's going on in financial markets now. The seizing up, the fact that there's a shortage of collateral. Jeff Snyder talks about this all the time. Shortage collateral in the system that promotes lending. The fact that you've got tightening credit conditions, even modestly, with the amount of leverage you have in the system, that's going to cause panic. It's going to cause heart attacks. And I think that's what you're seeing across the board in a lot of assets. And in particular, the story of the year so far, we always like to talk about stocks and Bitcoin, but the story of the year has been the absolute rout in fixed income, the absolute rout in the bond market, with the bond market selling off at historic levels, something like a 4 standard deviation move from the norm. That's going to send shockwaves through everything. Greg Foss talks about this all the time, but the bond market is really where the source of truth is. The stock market's sort of a derivative of the bond market, right? All the companies that are borrowing in fixed income, that is going to affect everything up and down the curve. So the notion that the bond market has to stabilize in our system, the credit markets have to stabilize for there to be any sort of stability in the equity markets.
How do you find stability in an environment where the Fed is just going to inevitably have to continue to print money? Where are your expectations at both, I guess, in that front, as well as more broadly in how or what merit you give? Okay, sorry, let me rephrase this. How much merit are you giving to like the yield inversions? I know a lot of people talk about them. I know they happened. I know that they then have since, both the 2 and 10 years have since unwound. And I believe we've since corrected. Are you giving any merit to that? Or are you more focused on just the overall credit and whether or not these payments are going to come due?
I think the real signal that you see right now is that something broke in 2021. We see this in the huge, massive euro-dollar market, particularly through the euro-dollar futures curve, that there is some issue, some dilemma in the euro-dollar futures market where you had an inversion, which to me is even a more reliable indicator than the bond market. And that tells you there's a shortage of credit globally, that there's a dollar shortage. A lot of theories what this is, if it could be driven mostly from emerging markets, from China, but we have a problem. Our system is fundamentally broken from my standpoint. That's what that's why I'm such a big Bitcoiner, because I think no matter how much stimulus they do, no matter how much easy money policies they try to promote and inject into the system, we still have problems that are manifesting itself in the real economy through the lack of credit creation. And people say, what are you talking about, Joe? There's so much money floating out there. There's so much dollars. That's true in a sense. It's true from a lot of consumers who got stimmy checks and were given, PPP loans and all this injections through cash. But what we find out increasingly is that the government spending, our Congress is spending, and in other countries that did the same thing, that is fleeting. It provides us, a short-term jolt, but you really need the private banks to step in and promote lending and issue credit. That's the lifeblood of our economy. And they're not doing that. They're actually pulling that back in a lot of respects. And unless you're extremely credit-worthy borrower, you don't have access to capital, which is causing all of these problems. And no matter what the policymakers do, they're sort of pushing against the tide that they can't control. So to me, the real crux of your question here is I don't think we're generating credit at a fast enough clip to let people to sustain the high levels of leverage and debt in the system.
I'm curious what your thoughts of something like potentially paying off student loans would have on this credit market at large right now, with that being one of the biggest bills due for the US government.
Yeah. I mean, I first of all, I'm a strong believer that's going to happen. I think it's just a matter of when and how long it takes before they can get consensus around something. But so I see you celebrating it.
I full disclosure, I have student loan debt that Papa Biden, you promised me you need to pay that off.
Yeah. Well, I mean, I think a lot of people do. A lot of younger people do. And, it's the type of thing where, okay, you remember when you forgive someone's debt, that debt is, something you're really upset about, but it's also someone else's asset, right? So that, again, when you extinguish that, or depending on how they actually construct it, that's going to be a cash drain for a lot of private actors who are holding that paper. So there's always an unintended side effect when you do these things. And yes, it may be short-term bullish for a lot of things that we care about, Bitcoin, other risk assets. But again, this is a drain on the system. This is something that I think in the long run is going to cause a lot of problems for us. You cannot solve debt, over indebtedness, with more debt. It's fundamentally incompatible. So you have two options at that point. You either debase everything, you go the Luna route where you just print a bunch of more assets and try to debase, or you engage in austerity. And I don't think we're ready for austerity as a society. I think people just would not have it. You'd have riots in the streets. So the reason I'm so pro Bitcoin, sorry, Pete, but let me just close the thought. Yeah, the reason I'm so pro Bitcoin is because I don't care about the short term. I know it sucks to see Bitcoin at, what is it, 29,000, somewhere thereabouts. It sucks, right? Everybody's disappointed. But in the long run, I think policymakers are going to come back and they're going to push so much liquidity and so much cash and so much spending into the system that Bitcoin will be the biggest beneficiary of all that.
Well said. I was just going to jump in and say, you know, the Lunatera stuff is insane, ridiculous, hilarious. But also, I was just going to comment on, you know, the U.S. dollar is another one of those things where we're just printing our way out of it, or they're trying to print their way out of it.
Yeah, I hope they do. You know, I'm kind of American Hoddle uses this term, and I'll steal it from him. I'm an accelerationist. Like I hope these things. I hope they try the wackiest, craziest policies possible to keep the house of cards in play. I hope they bring on UBI. I hope they forgive all the student debt. I hope they, you know, start, you know, rewarding people to buy houses and in terms of additional stimulus. And I hope they go all this hardcore as fast as possible, because at the end of the day, I think it's unsustainable. And I'd rather them push on that as hard as possible to move us closer to something, because I think people will wake up. One of the cool things out of COVID was that I think when you saw all this intervention from the Fed, a bunch of people woke up. A bunch of people came to Bitcoin and said, wait a second, this doesn't make any sense, guys. We know deep in our bones that this is just a flawed system, and we have to figure out a way to push against it to keep it afloat. And people are saying, I'm out of this. I'm opting out of this system. I'm going for something that's hard and something that I can trust, and that's Bitcoin.
You hit on exactly what I was going on a rant about over the weekend, where, like, yes, would it benefit me selfishly as someone who owns student loans to have it be paid off? Absolutely. Would it also probably shake up the system to rejigger it in a way where you take this money out of the expectations or the inflow that you should have essentially had, and then all of a sudden you further exacerbate the issues that we've been seeing with the money printing? It also is a net positive for Bitcoin. So this is sort of my call to say every single Bitcoiner should actually be and have this perspective that Joe is sharing. We're like, let them fucking print themselves to death. Every dollar they print is a dollar closer to the inevitable downward spiral of our credit system that we have, and the necessity to rebirth it with something new.
Yeah.
So,
And the other part about it is, think about the alternative, right? If they actually were serious and they're going to go and drive the car into the building, which is effectively what they do when they try to hike and do quantitative tightening and drain liquidity from the system. When they try to tighten financial conditions, you can kill everything, right? You can take down Bitcoin. I don't want that. I mean, I feel like there are some people in Bitcoin circles who are like, well, we need them to hike. We need them to tighten. We need them to do all this stuff to stop inflation. I think that's BS. I think that they should actually be pushing it forward and bringing about an end to a system that is, in my view, unsustainable.
here. I want to also talk about the other side of the coin, though, not just, you know, money coming in, but money going out. It's all, you know, my dad always used to say, it's not about how much money you make, it's about how you spend the money you have. And it's costing a lot more every single day to just operate in this country. They're sort of spinning the numbers around, giving us a very interesting inflation number. I'd love to just unpack all of that with you if you're open to it, and just your thoughts broadly on what we're seeing inflation and maybe what commodities you're paying close attention to.
Yeah, I mean, you have to be asleep and under a rock to not notice that everything that it costs to live a decent life is getting more expensive and harder. You know, I think the CPI is, you know, it's interesting because Bitcoiners for many years talk about how CPI is a flawed metric, but then when CPI starts popping off in real high numbers, we say, that's it, there it is. Now we believe it's a good metric. It's flawed. It doesn't show you a picture of what it costs to live, right? What really costs are the services, education, healthcare, things that are basic, essential things you need for essential living. Those are telling you the real message, because they're up, you know, 1,400, 1,500, 1,600% in the last 10 years. The fact that your groceries are up 8% sucks. The fact that your energy is up similarly high percent is also really bad, right? Your gas prices are overwhelming. But I think that people are missing the big message, which is that those core services that you need to live, you know, your healthcare, education, those things are sort of through the roof. You know, from my standpoint, I think it's going to get worse in terms of a lot of the short-term inflationary pressures. I don't think they're going to resolve. I don't care what the Fed does. You're not going to get more oil. You're not going to get more food. There's real supply shortages in a broken economy globally that you're just not going to be able to overcome in the short term. So people ask, well, wait a second, Joe, if you're such a big Bitcoin bull and you bought Bitcoin and it was 50% higher, isn't that much worse than people that just have to pay 8% more at the pump or 8% more for food. And I would say in the short run, you're absolutely right. It sucks to have this price movement, but Bitcoin is not really protection against CPI. I always like to say it's protection against long-term debasement, long-term degradation of your currency, which goes in spurts, right? It's not always, a day-to-day, month-to-month thing you can track. So you need to secure your future through long-term debasement with something like Bitcoin, a hard asset. In the short run, it's not going to bear out in terms of the price, right? There are days where you're going to take a real hit on whatever you paid for Bitcoin is, and that's just the reality. That's the growing pains of a very small asset. And for us that are, early adopters, we have to be used to that volatility. It just comes with the territory. But zoom out, as they say.
I love that explanation. I like wrote it down. I'm like, go back, like clip that. That's the clip for later. So thank you for that. I'm curious then, we see them tell us this inflation number. We see them also spin the inflation number around to make it look like whatever they want to pay attention to. Are there maybe like one or two commodities in particular that you're really paying attention to that maybe have or carry a bigger weight on just everything's impact, in your opinion?
I mean, the core lifeblood of the economy is oil, right? You have to look at oil. Notably, though, and again, this may trigger some folks, but if you take oil in its real terms, adjusted for inflation, we're nowhere near the 2008 hike, the 2008 peak of oil, right? We're still lower than that. And, this is why a lot of us say, I call it the Bitcoin deflationists. Like my biggest fear is really hard deflation of all assets rather than the inflation. Inflation is extremely painful, and I don't want to diminish it for everybody that is, struggling through higher prices for everything. But in reality, that's due to a lot of things that are not directly akin to what the Fed or Congress is doing. Those are sort of momentary disruptions because of the fact we destroyed our supply chains, and then we did a ton of stimulus money, which created a huge supply demand imbalance. In the long run, though, things are really cheap. I mean, commodities are extremely cheap from a historical perspective. Bitcoin, though, is a hedge against that debasement. Okay, even though your commodities may get cheap or more expensive in the short run, again, the real key thing you need to focus on is how they are destroying the value of your currency, your native currency, US dollars. That or in other countries, they're doing it even more. They're further along in this process than the United States. So that's the key thing to focus on.
Do you think that one thing I think is interesting is I think most Bitcoiners would argue that commodities are more expensive than they ever have been. Where do you think that discrepancy comes from?
I think it's because in their whole lives, they've never had to deal with really high inflation. I mean, the Fed was confounded, right? For like 10 years, you can actually go read their minutes. They were doing massive amounts of QE1, QE2, QE3, and they just said, we can't generate inflation. We can't figure out why there's no inflation in the real economy. What's going on here? And then they finally figured it out. They figured out to generate inflation, you can't just print a bunch of bank reserves and give it to the banks. You have to hand it to the people that will spend it very rapidly. And that's what happened with COVID, right? You had an entire economy disrupted because of the lockdowns. And at the same time, you gave everybody a bunch of cash. You don't think there's going to be a scarcity of goods that's going to cause short-term inflation? And they're right, Pete. Like you are paying more for most people. If you're in your late 20s and 30s, you've never seen anything like this. You've never seen any kind of rise of CPI like what we're seeing right now. So you're right. In your lifetime, you've never seen anything about this. But the key thing is, what is the trend? The trend continues to be that unless you're giving direct stimulus to the people who will spend it, policymakers can't generate inflation. Japan, until they started doing massive amounts of direct stimulus to people, they through hundreds of rounds of QE over the last 20 years, they couldn't generate long-term inflation. What does that tell you? It tells you that people spending money is what actually causes inflation.
Interesting. So you're not saying that inflation is overstated. No. You're saying, okay, got it. I misunderstood.
Yeah, no, I'm not saying it's overstated. What I'm saying is look at what's causing it. And what's causing it is direct money in the hands of people who will spend it. That's the thing. Bank reserves do not do that. In fact, when they made the system flush with cash, they put a ton of QE in there. The banks decided, well, we're not going to lend unless it's to Apple or to Tesla or to extremely credit-worthy things. That we're going to hoard this cash.
Wasn't there like like in the depths of the COVID, potential financial crisis, weren't they like shoveling money to all the banks? The banks were like, "Oh, we saw what happened in 2008. Like, we are not going to play fast and loose." And they had to be like, "No, trust us, it'll be good."
Yeah, there's great charts out there, one of which is the loan to deposit ratio, and you see like the actual loans relative to the deposits that they're holding are at an all-time low. It's like a 40-year low. The other one you can look at that I think tells a lot of signal is the velocity of money chart. Look at where velocity of money. That velocity of money is the dollars circulating in real time in the economy, right? Like again, like that circulatory system, like your blood system. You see it at an all-time, or at least I think it's a 40-year low velocity of money. That just tells you that the money is getting trapped in things that don't actually circulate into the real economy. The analogy I always use is like, imagine you print $1 trillion and you bury it in the desert. Okay. That money buried in the desert isn't actually going to drive up inflation. What would drive up inflation is you're handing it out to people in droves and they're buying up all hard assets and goods.
So why are we starting to see that right now? Or let's say over the last, 2-3 quarters, like what has changed? Because we've been doing helicopter money for a while now. What new systems have been in place that have driven the perceived or CPI measured inflation increasing?
Yeah, I think one of the reasons was that a bunch of people were hoarding cash during 2020. They were nervous about the economy. They were staying home. They didn't know if they'd have a job, right? And then 2021, you kind of had this, it's back to normal. We don't need to fear COVID like it's going to sack the entire economy. So they started spending. So a lot of deferred spending from 2020 got into the market in 2021. That's when we started seeing these elevated CPI prints. At the same time, they were pushing forward yet another bout of stimulus. The Fed was trying to do what it could to support real estate, which real estate makes up a huge chunk of the U.S. economy. So they were doing MBS purchases that were helping real estate boom, and that was causing a lot of additional, short-term growth. So you had this perfect cocktail, really. Also, the hangover from the supply chains being closed. They didn't resolve overnight. They were things that are going to take years to unwind the damage that was done during 2020 with some of the lockdowns. All these things made for a perfect cocktail that really is going to push CPI up in the short term. I also think there's an issue with the oil companies, because the oil companies many times now have learned a lesson that they're not going to get overextended. They're not going to do too much drilling, particularly given the policies that the Biden administration has advanced. They're not going to get over their skis. They're not going to face bankruptcies like they did in 2014, 2015. They just said, we're just going to withhold supply. We're just going to keep producing the same amount we did, and we'll let the prices elevate, and that's going to be enough for us to make a profit. So you've got a lot of different dynamics and cross currents in play. The key takeaway, though, is that there was real damage that was caused by 2020, and it will be felt for years.
I'm curious to how much, I fully buy into what you're saying about inflation being driven by, people spending, supply and demand. If people want to spend the money and businesses want to market a used car for more than ever, and people are willing to shell over the money to make it, the market is now dictated that that's the going rate, ergo inflation now to come. I'm curious though, where do you fall in line then to the deflationary aspect, or are we just sort of expecting this is going to be the price of most goods from here on out? The way kind of like gas in Europe was what we see now, and then gas in Europe is now exponentially risen. People are saying this is sort of where gas will live as a byproduct of what Europe has had for the last decade or so.
Yeah. So when I talk about deflation, I think that the majority of folks, us included, I think on the call, we have our money stored up in risk assets, right? And we've had anybody who's following risk assets know you've kind of had a deflationary event for the last quarter or two where prices have tanked. Now, what we know, the Fed emphasizes something called the wealth effect, which is just a fancy way of saying that people tend to spend more and do more and feel more comfortable when asset prices are rising. It's a documented phenomenon in the economic journals, and I think the Fed believes it. They believe that they need to do what they need to do to support asset prices so people keep consuming, because that drives the economy forward. So if you have a deleveraging, if you have a deflationary event for risk assets, Bitcoin, stocks, bonds, et cetera, if they all crash down, what are people going to do? Are they going to spend more, or are they going to tighten their belt? I think the data is pretty strongly shows, and it's convincing that people are going to tighten their belt and they're not going to spend as much. Now, to your point, there are certain commodities that you don't have a choice. right? You have to buy gasoline to get to your job. You have to buy certain things to succeed and survive, but you don't have to buy all the things. So you can easily see an environment, and this is kind of the idea behind stagflation, where real growth is declining, right, or tepid growth, but at the same time you have high prices in certain select commodities, one of which is oil, and that makes creates a real drag on the economy. So well, CPI and inflation, it's kind of it's a distraction in my view, because the real focus is on the wealth effect, and people's wealth, when it's destroyed, stop spending as they would if it weren't destroyed, right? So the system needs the wealth effect to survive. Otherwise, you have a massive deleveraging, and I think that will be unsustainable at a certain point.
I don't want to be like too speculative with this, so you're allowed to tell me to go F myself, but what is sort of an expectation you're having as far as what the next round of quantitative easing can be? I saw some conversations going around Twitter of just sort of, will this round be bigger than the last, and by how much? Curious your thoughts there.
Yeah. So generally, the short answer is nobody knows. Nobody has a clue. And what I will say is this: um, one of the things you can take away from March of 2020 is that when the sky is falling, you don't really know how much it's going to take to get it back up, right? And that's kind of the position that I think a lot of policymakers do. They have sort of a shock and awe monetary policy, and same thing from the stimulus side with the fiscal authorities, with the Congress. They don't know how many stimmy checks does it take? Is it one? Is it two? Is it 12? Is it every month for a certain demographic? To me, I think that when they get really scared, they're going to at least come back with double what they did last time. That's a bare minimum. That's sort of a floor. And then the question becomes, is that enough to reinstill confidence? Is that enough to keep the confidence game rolling? And maybe it is, maybe it isn't. If it isn't, and you still see markets selling off, they'll probably double that and do it in an exponentially increasing fashion. So, if you have a Fed balance sheet where it's at, you could easily see that doubled or tripled, into the next round where we have a deleveraging event. Now, to me, I think it's interesting as a thought experiment to think about how big it could get, how massive it can get. But realistically, for the average person, you need to understand that in that environment, what you want to hold is something fixed and hard like Bitcoin. You're not going to want to hold something that can be debased or confiscated. For stocks, okay, even if stocks don't completely crash, which I don't expect them to entirely crash, I think at a certain point you see the Fed stepping in and buying SPY, buying major equity ETFs, just like they bought major bond ETFs. Once they do that, you create a perverted market. And the thing about Bitcoin is I don't expect them to be buying Bitcoin anytime soon, which is going to let us be like the last bastion of freedom and last bastion of an uncorrupted market into the next downturn.
Wait, when do you think that might actually happen? Like Bank of Japan style, just being like, oh yeah, we're just buying the SPY.
Yeah, I don't know. I mean, I think
I need a date, Joe. I need a date and a time.
I mean, it's interesting to think of it from what would cause them to do that. And I think what would cause them to do that would be a hard down where you've got baby boomers who have the majority of their money wrapped up in the stock market, and stocks cannot rebound. No matter what type of stimulus and QE they're doing, stocks don't rebound. And in that dynamic, they say, well, wait a second, we can't let cities and pensions and all these different entities that rely on a stock market always going up and to the right, we can't let them go under. So for the good of the country, for the good of national security, we have to provide a bid. They have not done that yet. I know some people in conspiracy theories think that there's the plunge protection team that already goes in and does this already. I can assure you from my research, I've never found any evidence of that. I think that the more likely scenario is that you have that sort of hard down where you can't get assets to reinflate, and they come in at that point. But whether that's this cycle or next cycle or the cycle after that, it will be something that happens in our lifetimes.
100%. I completely agree. There is no way that the Fed will put the ongoing and future success of America ahead of the wrath of boomers.
Yeah, but keep in mind, the Central Bank of Japan, once they did that, the Nikkei didn't make a new high for decades. Just because there's a bid there that prevents the free fall crash doesn't mean that people are going to be comfortable in that dynamic. And there's a real reason for that, right? Once you have the Fed holding a bunch of equities and deciding when they're going to sell or when they're going to buy, your confidence in that market is undermined. And foreign investors are not going to want to put capital there. It's just
absolutely not. It's not a real market anymore. Basically, exactly. It's a fixed price good, and you know there is no market.
Right.
Joe, I'm curious to also just sort of, again, this is speculative. If you had this crystal ball, we wouldn't be having this conversation. You'd be on your island, not being bothered. Where are your expectations on when this QE gets injected by the Fed? Are you looking at sort of a percentage or a certain number for the NASDAQ or S&P 500 to hit? Are you expecting something else to sort of happen? Maybe on a more social level, the way we kind of saw COVID? Where or what is your expectation on that front?
You were always trying to trade those numbers.
Yeah. No, I'll tell you this.
Let me have my insider trading advantage, P. Like, come on.
Just buy Bitcoin, bro.
I'll tell you this. My view is that the signal is going to come from the bond market, not the stock market. If you see spreads blow out, you see LQD and junk bonds really taking a hit, and you see, for example, a 10-year well above 3.5, 3.6%, you can bet your bottom dollar that they're coming in pretty quickly with a pivot. That's my view. People disagree with me on that, but I think that's really the key. If you see because I mean, here's the facts. According to Stan Druckenmiller, famous investor, he was saying that as you're approaching 4% on the 10-year, you're going to be chewing up, I think he said, a third of the budget into paying interest on the debt. That's his calculation, not mine. But you just get an idea that it just becomes unsustainable for the Congress to service that debt. And that causes all sorts of havoc in the equity market. So really, the yields on the 10-year are your signal. Focus on where interest rates are going to be. And if they get to a certain point, you can expect them to intervene.
But now I'm curious because that makes total sense. And yet we also, I brought this up earlier, and now I'm genuinely curious, like, what about like if a 2-year or a 3-year bond all of a sudden creeps up somehow to like 3.25 to 3.5%? Is that also maybe an even more jarring situation because it's shorter term and those payments are higher as a result?
Yeah, absolutely. I mean, yields in general give you this signal. And also to the opposite, yields in general sniff out once the Fed is going to get ready to call uncle. Go back to 2018, right? The equity market was in free fall pretty much until Christmas Eve, but the 10-year yields peaked out in early October. We actually we wicked up above, I think, 3.25, and then yields continued to decline all the way up until when Powell signaled his pivot, and then they continue to decline for most of 2019 to where they hit the COVID bottom in March of 2020. So the bond market's really savvy. In many ways, I think bond market traders are much better than equity market traders. They're not as distracted by the colorful objects, and they don't get as jittery. They really provide a ton of signal. That's the whole point of why the yield curve is so important, because it's a signal in real time from major institutions that are buying these highly liquid securities. They're highly liquid bonds. They're buying this collateral for the purpose of trying to hedge and put on good trades. And I think it's a very deep, sophisticated market, and you should never ignore their signal.
Where, or sort of maybe the better question is why would the Fed be aggressively raising rates right now, knowing that they sort of have this backstop up ahead? Or is this something that, someone like Stanley Druckenmiller, who has amassed an incredible fortune and probably knows the markets better than everyone, including Jerome Powell and everyone he talks to, is that maybe more his analysis versus like the Fed actually has those numbers in front of them to like make that type of a calculation?
Yeah, great question. So the view is this: the Fed's decision to hike and to taper and to begin rolling off its balance sheet as of June 1 is driven by one thing and one thing alone: politics. Ultimately, this is a decision to hike because so many people are literally screaming at the Biden and the Biden administration that they need to do something about inflation. They need to do something to confront the fact that I'm paying these ridiculous gas prices, this ridiculous food prices. They should have acted earlier. And in Washington, everything's about the blame game, right? And if the Biden administration, which they did in the State of the Union, literally referenced the Federal Reserve, they referenced the fact that the Fed had to step in and do something about inflation. The Fed says, okay, we're going to hike. And their idea, and this is really critical, their idea is we can destroy enough demand. We can engage in what's called demand destruction that consumers will actually stop spending. And that will act as a brake on inflation. It's a theory. And again, it's one that will likely not work, in my opinion. The reason is because no matter how many hikes you do, no matter how much QT you do, you're not going to get more oil out of the ground. You're not going to resolve the agriculture shortage that's globally. There's nothing they can do other than try to tamper expectations and influence consumer behavior. It's almost like a giant psychological operation that they're trying to run on the American public to convince them that because they're being hawkish on inflation, that they're doing something, that they're out there on the front and they're trying to. I mean, look at that last speech from Jerome Powell. He went out after the FOMC meeting and he basically did his, as Jeff Snyder says, his best Bill Clinton impression. And he said, I feel your pain, American public, about the inflation. I'm doing something. We're acting. But guys, nothing you're going to do short of destroying financial markets is going to stop high CPI at this system at this point, because you've got a broken supply chain and you've got not enough commodities out there to meet the demand.
Yeah, it's all just noise.
It is noise. It's a giant noise. It's a giant site. Like they're trying to do their best thing, which is jawbone and influence expectations. That's their best tool at this point, is convince people that they matter.
Yep. Yeah, and I know I harp on this a lot, but as Charlie Munger, decrepit old man, likes to say, you show me the incentives, I'll show you the outcome. And everyone in this system is incentivized to just keep the party rolling.
You have to ask yourself, when did the Powell tightening pivot start, right? It started last fall when he was up for renomination in front of Biden. And we know through many reporters who have looked at this that Biden said, you have to have my back on inflation. You have to do something. In fact, through most of the summer last year in 2021, Powell came out and he said, inflation's transitory. It's going to go away. Don't worry about it, right? When did he pivot and say, nope, it's no longer transitory? Right when he was getting interviewed for another term as Fed chair, and he wanted another term. So he had to go out there and he has to sell this line to people that he has some ability to influence something which he cannot influence. It's just theater.
I feel like it's like when in my fantasy of like back in the day and like, tribal whatever communities, like small groups of proto-humans, and there'd be like the witch doctor who would be like, yes, if you give me this thing, I will do my dance and the rains will come. And they'd be like, well, why haven't the rains come? And they'd just be like, well, you didn't give me enough of the thing, or some other random reason. And the reality is, it's nothing to do with what they're doing.
Yeah, I mean, look at the movement you've seen in bonds. We talked about how it's a total rout that people have sold off bonds because it's all based on expectations. It's all based on the fact that they went out there and said, we're going to hike 15, 16, 17 times. So the market gets way ahead of them. The market actually front runs them. They sell off those bonds, yields skyrocket. And right now, if you look at where the 10 years at and where the 2 years at, they're actually ahead of where they think the Fed funds is going to be by the end of the year. I mean, literally, it's all about expectations. That's the whole game.
And your thesis or part of it is that the bond market is much more, what's the right word? Not informed, but much more astute and understands these nuances more than, the Robinhood crowd. And obviously we're talking about it's much bigger than the Robinhood crowd, obviously.
Oh yeah. It's very sophisticated. And I think they can read the tea leaves. And they also know the breaking points, right? Mm-hmm. They know my view is succinctly, that the bond market tells the Fed what to do, not the other way around. The bond market will force the Fed's hand at a certain point.
Do you think the Fed is aware of that? Do you think this is like during the
for sure
100%? 100%. Okay.
Yeah.
It's almost like the block size wars, where the miners were like, we control the network. And then it was like, oh, do you though? But no, you're saying everybody knows what the state of play is.
Yeah. There's a great quote by a political strategist, the Raging Cajun, James Carville from the Clinton era, where he says that Yeah, if he could come back to life, he'd want to come back as the bond market because they can scare anybody. Like literally, that's his quote, and he's right. He's dead on.
Yeah.
Bond market can scare presidents. The bond market can scare the Fed chair.
That's so funny. I want to present a question to everyone here. It's my favorite little figure or number or stat or whatever you want to call it to pull up on people who want to dunk on the fact that Bitcoin is more than 50% off of all-time highs. And it's that the last time the NASDAQ was trading at these current levels was November of 2020 when Bitcoin was worth $14,000 a coin. So we're over 100% above that level. Sounds to me like Bitcoin's a better store of value than the public markets, but I don't know. I just read charts. I'd love maybe Joe and P, your commentary on just like this idea that you can look at the charts, you can look at the numbers and see, even in the short term, Bitcoin is holding better value than other things that we have stored our wealth in.
Oh yeah, I mean, look at even blue chip names that everybody who has a retirement account had exposure to Netflix, right? Like it was a basic component of the S&P 500. Look what happened to that stock. Absolutely crushed. Does that mean that stocks don't, act effectively in our society for the boomers as money? Of course they do. That's where they put their money, right? So the notion that, I think people confuse different things. They confuse different concepts. Can Bitcoin sell off extremely hard? Is it extremely volatile? Yes. Okay. But Bitcoin has attributes that make it the strongest store of value that the mankind has ever known. And many of them are not just even the price, right? The unconfiscatable nature of it, the infinite scarcity of Bitcoin, the fact that it's hard written into the code that you cannot change these rules. These things, in my mind, are way more important. Really, they are more important than the short-term volatility of the price. That's why people could put their life savings in it, because they can go to bed at night knowing that no matter who steps up to the plate, no matter what nation state says they're going to do X, Y, Z, new political policy, I have confidence that one Bitcoin equals one Bitcoin. And the short-term fixation on what the USD value of Bitcoin is going to distract you. It's going to confuse you, and ultimately, it's going to cause you to part ways with your Bitcoin. So, to your point, like I think, yes, it sucks, and I don't mean to diminish it at all. If you're sitting on a big loss, if you bought Bitcoin above 50 or 60,000, I've been there. We've all been there if you've been in the space long enough. But zoom out. Notice that the marginal daily price of Bitcoin is not the real signal. What is signal is the network and its growth and adoption. That's what you have to focus on, and its attributes that make it different from everything else out there.
Well said.
I would argue and say that despite that, like I do buy into this idea that, we're watching hash rate enter new all-time highs and difficulty enter new all-time highs. But historically speaking, it doesn't feel like Bitcoin really cares about those things. Bitcoin's number moves sort of in rhythm with a general market sentiment. So how or what is maybe impacting that versus what should be, which is all of these network effects and proving that, we're seeing an increase in wallets or whatever other metrics that we want to use to show that.
I think that the fundamentals of Bitcoin have never been stronger. And if they've never been stronger, why doesn't the price reflect that? And to answer that, you got to get into a real complicated discussion about leverage in the system and credit in the system. You have to get an understanding of how an order book works and how in the day-to-day price of Bitcoin, it's set by the marginal buyers and the marginal sellers. The guys who set a bid or put an ask, and they literally can move the market in different ways. That's what causes short-term fluctuations in Bitcoin. Okay. And by the way, we all know it can fluctuate wildly within a single month, just because the traders decide that this indicator says it's bullish, or they think the real economy is going to run up, so we're going to buy it or sell it, vice versa. That does not provide any signal. And people really confuse that. The signal is all the things you're talking about, the real fundamentals of it that tell you this isn't going away. So again, why aren't the fundamentals showing the long? Why isn't the price reflecting the long-term fundamentals? And the answer is because in the short term, the fundamentals really don't matter for the price. What matters is, do traders think that this thing is going to go down or up in the short run? And it gets confusing, but you have to really separate that out from your mindset.
P, what are your thoughts just broadly on network effect impacting price? And then as well, the question I asked before.
Can you restate the question?
You don't remember it?
I wasn't paying attention. I'm sorry.
It's fine because I don't remember the first question either.
Well, no, but I mean, there's a thing that occurred to me. Well, first of all, I just want to take a sip from my my liquid sustenance, just some gin. One thing that I spend a lot of time thinking about is just when events like this Lunaterra meltdown happen, I lose faith in people's ability to actually understand the value of Bitcoin. And I find myself wondering whether I agree with everything you said, Joe, as always, or as usual, I should say. But I don't know what it will take for the American people, at least. I think in a lot of other countries, people already understand the importance of sound money. But I don't know what it will take for people to actually truly value Bitcoin as it should be valued, because everybody is so high time preference and so greedy. It's only in those environments that I feel like things like this Lunaterra explosion, which, I get to sit on the sidelines and be like, man, this is wild. And it played out as I expected it to. Obviously, not the specifics, but just in general. What do you think is going to happen? What do you think has to happen before the average American is like, man, this shit is fucked?
So this is going to be depressing, so I forgive me for this, but I honestly think the vast majority of people, as they have for the last 10 years, are really missing how important Bitcoin is, and they will continue to miss how important Bitcoin is. I think that the future for Bitcoin, at least for the next 5 to 10 years, is going to be a small select group of people that take the time to understand it, and really high net worth individuals who are nervous about the policies that are going to come from central authorities, from policymakers, from central bankers, from regulators. They're going to get nervous. They're going to continue to understand that the only way to keep the system afloat, the only way to keep it stable, the current legacy system, is to have more and more control, to grab a hold of it, to try to intervene, to put in place these different policies. And at the same time, they're going to say, wait a second, there's something really wrong here. We need to look at something alternative, and we need to get increasingly exposed to this other asset. I think the way Bitcoin goes from, $30,000 up to $1 million is largely driven by high net worth individuals, the people that have a lot of resources in society. I think that you're going to have the third world embrace Bitcoin as well, but the average middle class person in the United States is going to continue to miss Bitcoin until it's much, much higher. That's my view. I think you're going to have sort of really diametrically opposed people that are joining Bitcoin's network over the next 5 to 10 years. You're going to have a bunch of people in really poor areas that say this is much better than the legacy system we've been handed to us by our native fiat currencies. And at the same time, you're going to have a bunch of people in really wealthy areas that say, this is for me. I'm going to try and buy up this asset. And in the middle, you have a bunch of people that just say, listen, I just want to Netflix and chill. I don't care about all this monetary bozo mumbo jumbo. It doesn't really matter until it does. That's just generally how people change, right? People change when they need to change, and people at the highest levels, they're going to need to change because they want to preserve the wealth that they've worked really hard to achieve, the high net worth individuals. And then people at the lowest levels, they're going to say, I can't deal with this native fiat currency that's totally subjecting me to abject poverty. So you have a weird sort of dichotomy there that I think is going to move Bitcoin forward.
Yeah, that makes sense. And to clarify, I think it will definitely happen. It's just a question of when. And it feels like we're in such unprecedented times. Even knowing that, during the fall of the Roman Empire, we've talked about this a lot on Clubhouse, right? You just, nobody understood what was really happening, or the majority of people didn't understand what was happening. Some people certainly did, and they just, you find all these letters of like, oh yeah, the number of bandits on the roads has increased, and this other random thing has increased. But I feel like we are in that moment, and in the same way that it is difficult that it was difficult for people then to truly understand what was going on, I feel like it continues to be difficult now, even for someone like me to really track on the details.
Yeah, the analogy I always use, and I think it's spot on, is imagine you're sitting at the Grand Canyon and you know that there's another side to the Grand Canyon, right? But to get to the other side, there's a pretty treacherous path in between, right? And I think that is kind of where we're at with Bitcoin. I think we all know how this ends, but the middle part of it, it can get really treacherous. People can get knocked out. People can, be. I mean, I have built into my mental model Bitcoin's price to fluctuate wildly for the next 5 to 10 years. You just have, I literally say that I can design a set of circumstances where if the economy falls off a cliff in the same exact month, same 12-month period, you could see Bitcoin crater down to, 5K and then go up to 500K. And the reason for that is because of what the legacy system is doing around us. Bitcoin's just too small to stand independent of that at this point. Now don't kill me over the number 5K to 500,000. The point is,
I wrote it down. I'm going to hold you to it.
No. The point, what I'm trying to illustrate with that is that you have a system, okay, the legacy system that is incredibly weak. And in that really weak legacy system, Bitcoin is side seat to it. We're kind of just held hostage to what's going on in these broader markets. It won't always be that way, but for right now, we could be there. We could have wild things happen with the price, and just be prepared for that.
Fair enough. What, Q, you open your mouth. Very.
Well, I was going to flip the script to El Salvador stuff unless you wanted to stay on macro.
I just wanted to ask, what is the thing, Joe, when you're like, deep asleep and you like wake up and you're like, and you're tossing in your bed and your significant other turns over and is like, Joe, it's okay. You're just having a nightmare. What is the thing that you fear in your heart of hearts related to Bitcoin, not just like normal life stuff?
Yeah. Honestly, the thing I'm most afraid of when it comes to Bitcoin is that I think that if the price gets really far ahead of itself in the short run, and we don't have the infrastructure set up, we don't have the people to go out there and advocate for Bitcoin, and we don't have the people that are willing to stick their neck out and support Bitcoin, we could be in a situation where Bitcoiners become political targets. And while I think we can overcome that, and I don't mean to scare anybody about this, but I do think if Bitcoin is wildly successful, which it has been, but I think people underestimate how successful it can be, Bitcoiners themselves can become political targets. And what, by virtue of my day job, which we haven't gotten into a little bit, but I'm a commercial litigator, and, fighting for, I like to say I'm a commercial litigator supporting Bitcoin, because I do think there will be fights ahead in the court system where we have to stand up for property rights. We have to stand up for sovereignty and everything that makes Bitcoin whole. If we don't have a team of people and an army of advocates for Bitcoin, not for crypto, guys, I don't care that there's a bunch of crypto lobbyists. That's irrelevant in my opinion. That does not help us. The fact that we had crypto advocates and crypto lobbyists during the infrastructure bill, that's in many ways, it's detrimental to Bitcoin. I want there to be a Bitcoin ecosystem that's pro Bitcoin and pro freedom, to be ready to stand if something wild happens with the legacy markets and all Bitcoiners now sitting on incredible amounts of wealth, because we will become political targets. And that's what keeps me up at night. I think we can overcome it. I think we can overcome everything. I think Bitcoin wins in the end, but that's not to say there can't be a rocky path in the interim.
Can I interject there real quick, Joe? I think that's really
Chris.
Good stuff. So when you say by political targets, do you mean by like force, or do you think that people will be lobbying for us to support their political campaigns? For clarification, because I'm not saying multi-sig's a perfect solution, but like, let's just say, you have a bunch of Bitcoin, but you have it in distributed locations with like, a 3 of 5 multi-sig or some, what you consider secure. Yet we joke the $5 wrench attack will become the $10 or $100 wrench attack with inflation, but like, do you see it as more of people won't understand that and attack us physically, or we will just be harassed to support political ambitions? I guess that's what I'm trying to clarify.
I think it's all of the above. I mean, I think all of these things are possible on a spectrum. Given we're in the United States with a well-established rule of law, I think you can see more draconian policies put in place that are much more destructive than, like, much more likely than I think we're going to jail Bitcoiners, or we're going to force them to be turn over all their Bitcoin. What I think you could see, for example, a host of things like maybe a different tax rate for when you're selling Bitcoin, extremely disadvantageous tax rate that could be put in place, or the fact you can't hold your own Bitcoin. You can't take self-custody of it. You have to do it through a custodian. These things, I think, are on the table realities that or attacks on proof of work mining. I mean, you can go on and on about anti-Bitcoin policies that generally try to attack it at the margins. And I think the reason that they would take that route is because attacking something at the margins is generally more feasible and really, hardcore regulation, hardcore attacks. The idea that everybody talks about 6102, I think that's very unlikely. I think that's, especially with Bitcoin, I don't think they'll ever go that route. But I do think what they could do is they could do the custody thing. I mean, think about Wall Street, right? They have an incentive for why they would want to hold your Bitcoin, and a law that would say, well, you can have Bitcoin all you want, plebs, but it has to be held with a certified, reputable KYC custodian. You have to do that. Otherwise, you're committing a crime. Now, those things I think are unconstitutional. I would challenge them. I would be in court fighting them vigorously as a litigator. But I would tell you, I do not discount the possibility of something like that occurring. And that's why I think, like my earlier point, I want a Bitcoin community that's, sticks together, that has each other's back. And we really have to divorce ourselves from the broader crypto movement. I don't think that's the pathway forward for Bitcoin.
So I want to go down this rabbit hole with you, given your background and essentially your day job, if you will. But first, I want you to just give your best definition of what is the difference between Bitcoin and crypto.
I think crypto has nothing to do with Bitcoin, in my view. I think crypto is, that's the only way to define it, really. Bitcoin has unique attributes brought about by everything we study and preach and talk about all the time: the immaculate conception of Bitcoin, the nature of the network, the nature of the nodes that support it, the nature of the asset itself. All these things are something that I don't think you can copy. I think it's a unique creation for a unique moment in time, unique meaning one of a kind, and all these derivatives and experimentation and innovation, whatever you want to call it, if you want to use it in favorable terms, none of them have proven to do anything useful. That's my view. Bitcoin solves a real problem we've had for a millennia, if not longer, which is money. How do we have an incorruptible source of money? And I don't think anything else out there comes close to the raison d'etre of what Bitcoin is, the reason for Bitcoin's existence. All these other things I view as barnacles on the hull of the ship of Bitcoin. You have this huge, amazing creation, the Nakamoto innovation that was real, and then you have these things that leech onto it, that try to pose as it or survive off it, that drain liquidity from it. It's almost like parasites, right? That's the broader crypto movement, as I said. Now, does that mean there can never be anything innovative or positive coming from quote unquote crypto? I'm not going to go that far. I'm just saying, in everything I've ever seen at this point, I don't think I've ever come close to identifying something that Bitcoin couldn't do if it needed to do it.
Love that. Well said. Quit shitcoining in the chat. I see you idiots. Talk to us, Joe, now a little bit. You threw out some very, very scary, but also very real possibilities of legislative efforts. I don't want to play the speculative game, but maybe walk us through one of these scenarios of how it would come to pass. Where is this coming from through Congress, and maybe who you're paying attention to that would be the vocal proponents of this anti-Bitcoin or more difficult Bitcoin legislation, if you will.
Yeah. So most of you that follow Bitcoin space already know their names. You have the enemies of Bitcoin list, the Brad Shermans of the world, the Elizabeth Warrens. They're all out there, and it's entirely expected and it's entirely anticipated. You don't have a revolution in human history without there being pushback. There's always going to be pushback to somebody who's trying to change the game, and Bitcoiners are trying to change the game. So in that dynamic, you have to go on the full gamut of what is most likely, what is less likely, and you kind of have to say, what can we do to try to prepare ourselves and protect from what we know is coming? So from my perspective, I think that it's extraordinarily positive that we have at least a couple pro-Bitcoin senators. I think that I want to create, again, more folks that are not pro-crypto necessarily, but pro-Bitcoin, because they are different. The problem with that is that one of the things that Wall Street and many other powerful entities have learned is that these other non-Bitcoin things, they can be co-opted. I was just tweeting about this morning. Like Wall Street was interested in finding a new way to make money. They saw Bitcoin, but then they realized quickly that all these other crypto can be easily co-opted and controlled. So from my perspective, that is going to lead an army of lobbyists, an army of influencers and political clout and money that's going to be pushing these things that are not Bitcoin. So the only way to protect us is we're never going to beat them at that game because they're always going to have more money and resources. Our ability is to try to go out there and believe that the message of Bitcoin is one that can win over hearts and minds. I mean, I'm a big believer that being right makes might. And I think that if you are preaching how Bitcoin is different from all these things, you will have the rhetorical edge on all these other altcoiners, right? You have the best thing in the world, which is being right on the merits. And that's how we have to win. We have to win by being right on the merits. And that's not something you're going to be able to do. You're not going to be able to hire more lobbyists. You're not going to be able to hire more lawyers. As someone who I pride myself on trying to help Bitcoiners and people that are sued that are Bitcoiners, I can tell you that I could make way more money if I were catering specifically to non-Bitcoin projects, right? There's so much money out there outside of Bitcoin. The only thing I personally am able to, use to put my head against the pillow and take solace on at the end of the day is that I know I'm doing something that's not just about the financial return. It's also about what I believe is going to be a more just society. So I like to say like Bitcoiners are more, they're not solely focused on the monetary gain. That's important. And Bitcoin fixes, most things. I get all that, but you have to also be thinking about this is not just for you. This is for the broader movement of Bitcoin.
100%. I also just want to give you some serious props, Joe. We've known each other for what, maybe 18 months now. First met just yelling at, yelling is such a strong term, discussing Bitcoin on Clubhouse. And there are so many people in this space, myself included, who just spend a lot of time talking about Bitcoin. And I have always been, I've always admired you for not only do you talk a lot about Bitcoin, but you also take direct action. And, we did a lot of Twitter spaces around the infrastructure bill because you had spent a lot of effort working with Lummis's team and, other political groups to try to make sure that Bitcoin was fairly represented and fairly treated. And I don't know if everyone who's listening knows that about you, but maybe if you could speak to some of the work that you've done in that regard.
Yeah. So to be in fairness, there's been a ton of people that have done a lot of work, and to the extent I could lend my voice to certain causes or arguments or review things, I've tried to do that. I've tried to write about it and speak to the the Bar Association and other normies, so to speak, about these things, which I think is really critical, right? You can't just be in the echo chamber talking to the same people. You have to go take the argument out to the streets and take it to policymakers. I spoke with my congressman about this issue. I tried to plead with him. I tried to at least give him pause that he knows everything about Bitcoin just because he's read a couple articles in the Financial Times or elsewhere. And that's what I think everybody can do. And I am not unique. I'm not special in any way in that regard. I think there were thousands of Bitcoiners that tried to speak out, and I think that will come again. And this will be something where it's almost a recurring thing. As Bitcoin gains prominence, you're going to have more political involvement. I know there are people in Bitcoin that say, screw that. I just want to go off and do my thing, and I don't want to be involved. And that's fine. You can do that. I'm not saying don't do that, but to me, it's sort of, what is your goal here? Is your goal to protect, insulate the network, become, like Michael Saylor says, a cyber hornet for Bitcoin? Or is your goal just to do your own thing? Either one's fine. I just prefer the cyber hornets. I prefer the people that are going to be out there advocating on behalf of Bitcoin.
Yeah, 100%.
I'm curious, Joe, your thoughts, because you kind of bring up the idea of let's get some pro-Bitcoin people into Congress, in DC, helping to be in those rooms to make decisions. But I look at what just happened in New York, where you see someone like Mayor Adams, who originally announces they're going to take part of their salary in Bitcoin. Then, it's actually going to be Bitcoin and Ethereum, but I'm going to make New York the hub for crypto, Bitcoin, or whatever it is. And then the next thing you know, now New York State is passing through this legislation that it almost inhibits Bitcoin to really develop in a free market. I'm curious, like, why do we want to believe politicians this time? That this is going to be the issue, that they're actually being genuine, they're being forthright, and they're going to follow through on the promises during the campaign, that they're going to follow through on those campaign promises.
Yeah, well, you don't believe them. That's the short answer. You operate from a standpoint of, don't trust, verify. And what you've seen with successful political groups for decades now is that they don't trust the politicians, right? You start with the premise that we're not going to trust you, that we're going to have to get you to commit. We're going to have to follow up with you. This is a dialogue that's ongoing. And if you go off the beaten path, if you stray, we will remember that. And then there will be no sympathy for you moving forward. And a lot of successful activism, both on the left and the right, begins with this premise. I mean, when you're running for office in the United States, for most major offices, one of the things that first, when you announce your candidacy, you get inundated with a survey, right? Emily's List sends out a survey, Personal PAC, a lot of these, pro-choice groups send out surveys, and the NRA and, the more tax policies, tax groups or anti-tax groups, they all send out surveys as well. And they literally want you to commit on your policy issues. They make you sign on the dotted line saying, do you support this? Do you support this? Do you support this? And they get it in writing. Right? They don't get vague platitudes on a Twitter that I'm pro crypto or pro Bitcoin. They literally ask them the specifics, like, do you support, the right, the constitutional right to take self-custody of your Bitcoin? I want those kind of questions to be asked to your elected representatives. Don't ask the vague, of people running for Congress. Are you pro Bitcoin? That tells you nothing. Ask the specifics. Are you in support of a de minimis tax exemption where if you spend Bitcoin under $500, you don't need to get taxed on it? That's the kind of things we need to get policymakers locked in on. So if they ever pivot later on, and they will, rest assured, they will always pivot. They will always flip-flop. That's the nature of politics, because as you go up the food chain, you have to, change who you're trying to cater to. We can throw it back at them and saying, well, when you ran for Congress 4 years ago, you said you supported proof of work mining. Now you're running for higher office and you're changing your tune. What happened? Were you wrong then, or are you wrong now? Like, those sorts of things that literally putting people on the record are essential for the Bitcoin movement to have any sort of political clout.
I've got a completely different question, Q. I don't want to cut you off, though.
I'm curious, like, you bring up someone like Brad Sherman, who is running against a pro-Bitcoin candidate like Erica Rhodes. I'm curious, though, about like this idea of being a single issue voter when it comes to Bitcoin, then, and blinding yourself to other stances or other sort of things that some of these politicians may also want to push forward, whether they believe it, or maybe it's because some of their other donors are telling them this is what you also believe.
Yeah, well, first of all, I don't think being a single issue voter on any issue is a smart strategy, right? Like, I'm not gonna back the candidate that's like, well, I'm pro Bitcoin but pro genocide. Like, that's not going to be my thing, right? Like, being a single issue voter is dumb. What I think you need to look at more is like, does this person's interest, the bulk of their interests align with the Bitcoin movement to the extent there is one, and also what is the alternative? Now with Erica, okay, do I think she would, even though I disagree with her on many issues, do I think she would be a better alternative than Brad Sherman? 100%. It's not even close. On many issues, she would be similar to him, I think, but net, she's a preferable alternative in my mind. So while I disagree with her on many things, I don't see anything that would be so much of a disagreement that would be a deal breaker. But to your point, like, I think the notion of single issue Bitcoin voters kind of it's not a good way to frame the issue.
Okay, I've talked enough about politicians and politics on a Monday, P. I will cede the mic over to you.
Finally. Two questions. Actually, I've got a whole bunch. One, Joe, one of the things we've been talking about a lot recently in this specific Bitcoin Magazine Live is some of the issues around nutrition. There's been a lot of stuff happening recently, talking about shortages in baby formula, things like that. So I got to ask, are you pro or against insect milk as a source of nutrition?
As long as it doesn't take a lot of my Bitcoin, I'm good with it. I don't have a problem with it.
Ooh, great answer. Great answer. I'm
He
obviously
hasn't had a conversation with a human being outside of Bitcoin Magazine. So you're actually the first, Joe. So I apologize. He's still working on some things.
It's okay. No worries.
No, Joe and I go way back. He used to go into the Mensa rooms on, we've had many conversations about this. We talked about almond milk, the pros and the cons, how you have to milk almonds, their little almond teats. It's a whole thing. It's a whole thing.
I got to go tell you, I listen to a lot of boring podcasts about the bond market and the euro dollar system and very, very mundane stuff. But my brain has never hurt as hard as leaving a Mensa room. Like when I go into those Mensa rooms, I'm like, oh my God, is this? Because he always tricks you into thinking it might be real. Like somehow like he lulls you into this sense of security where you think this might actually be legitimate. Someone might be listening and thinking this is true.
There's nothing you could have said that would have been a higher compliment, because you're one of the smartest people I know. So yes. And just for everyone else, we used to do these rooms that were like these improv, insane rooms called Mensa rooms that were just, we would debate just totally insane premises like, dirty globe earthers versus flat earth truthers and all sorts of stuff like that. Anyway, all right, all joking aside, actually, no, I'm not done with that yet. What is your favorite conspiracy theory? Like the most insane, like out there thing that someone truly believes that you just don't understand how somebody could.
I don't know if someone truly believes it, but I was watching a 60 Minutes. It was like a whole, check it out. It's hilarious. The 60 Minutes on birds aren't real. I think that's genius. Absolute genius. The guy who came up with this.
Yes.
He's so funny.
He's
so
hilarious.
Funny.
But my understanding is there were some people that actually believed it for a little bit. Like, which I
I'm
think
sure.
is crazy. This is crazy.
Dude, I think 60 Minutes believed it. Like it wasn't until halfway through that they were like, oh, he's just really funny. Okay. Someone at CBS watched that and was like, oh my God.
Yeah, it was amazing. But there's a lot of that going on, the truthiness concept, right? So
yep. Yeah, that's a fantastic interview. If y'all haven't seen it, it's truly amazing. She asks him at one point, like, he's bashing on like news media and like the lies that news media perpetrates and everything. And she's like, well, you're talking to me right now. Like, how do you feel about 60 Minutes? And he's like, look, I mean, talking about time, minutes, it's all good. Like, you just burst out laughing. Okay, so putting that aside, the conspiracy truths, as I like to call them. Tell me about the work that you're doing with Rob and Becca. I'm super interested to learn more about it. You guys are one of the groups that has found a niche in the Bitcoin ecosystem that is not currently served, and I think that's a super interesting thing. I think there's a lot of people that are trying to do that, and I'm super impressed that you guys have successfully isolated one. So tell us all about what that is and what you guys are trying to do.
Yes. So Rob Hamilton has founded a company called Anchor Watch. And the idea behind it is Bitcoin self-custody insurance and other insurance solutions. So it's very much in its early days. There's a huge regulatory moat that you have to get around, which we're working on. So more of that will be on its way. More information is going to be on that way. But effectively, I come from a background as a commercial litigator and also as an insurance service advisor, where in my day-to-day job, I advise numerous insurance companies how to navigate regulatory environments. And from discussions in that space, I realized that custody solutions, insurance solutions for Bitcoin are very difficult for many customers, for many individuals, for many companies. So what we're trying to do is we're trying to put forward more of a comprehensive package for people, and for people that want to take physical custody of their Bitcoin. At the same time, when they're taking self-custody, they have a lot of anxiety and a lot of nerves and a lot of things they have to overcome. And if we want, the amount of hodlers to increase tenfold over the next 5 years, there are going to be people that say, listen, I get it. I want a self-custody. but I'm just nervous. I just don't know how to do it. What if I do something wrong? What if I get robbed? What if I have a catastrophic loss? And our goal is to try to fill in some gaps and help people cross the Rubicon and then get fully orange pilled. My goal is for people to be able to feel comfort and peace of mind when they're taking self-custody, and also companies too. So I can't go into too many more details on it, but that's the general premise, right? Like, yes, most of the people right now, you had to go through that nerve-wracking experience of when you send a transaction, something may go wrong. I may put in the wrong address. I may have a technical glitch. My cold card might catch on fire, all these different things. Our goal is to try to mitigate against some of that stuff.
Got it. Well, I'm super excited to learn more about it.
Yeah, you'll be hearing more. It's the company again is called Anchor Watch, and follow Rob Hamilton on Twitter.
And I know a bunch of the people that are super well respected in the community are also like super excited about it, and so I'm excited to hopefully have some more conversations about it. Ideally here.
Yeah, we will. We absolutely will. And this is where we go to the next threshold of people coming into Bitcoin. The next frontier of Bitcoin is we start to have products, services that make it really easy. And if you're out there, like, listen, we need ways to take care of your Bitcoin. We need more options for people that want to integrate Bitcoin into their businesses. There's so many different opportunities right now that, in addition to just buying and holding Bitcoin, right? This is a whole industry that needs development. And I guarantee you, Jack Mallers can't do it all on his own, right? He needs other people out there to make us more robust as a market.
Yep. Yeah, I guess not. On the other extreme, you've got like people like, Jameson Lopp, who, is like, he's got these amazing write-ups of like all of the hardware or all of the seed plate tests that he's done, where he like dips them in acid and sets them on fire and hits them with a hammer and stuff. And the reality is 99.99999% of people do not have the time or the interest in doing all those tests. So I'm super excited for systems like what you guys are doing that'll help people learn more and then be able to more safely take custody of their own stuff.
Absolutely.
Cool. Q, back to you, my guy.
Thank you, Pete. Joe, I know we're winding down on our time. Curious, is there a book that you either read recently or you're currently reading that you're obsessed with or want to share?
What was the book? It's escaping me. There's a recent book on the Federal Reserve that I just finished, and of course, you would give me 1 second. I will pull up the name of it. It's good. I recommend. Oh, there it is. The Lords of Easy Money. It's on Audible as well. I actually, full disclosure, listened to the Audible of it, but the Lords of Easy Money, very good take on the Federal Reserve. A couple of things I disagree with it on it, but there's no book I read where I don't have a few things I take a little bit of issue with. That's the only way I can listen to all of them. Just try to say, well, where do you disagree from what's being put forward in the book? But highly recommend The Lords of Easy Money. It's came out in January of this year. It's by Christopher Leonard. That's a good one. So that's my pitch of the day.
Awesome. Thank you. Thank you for that. And thank you so much for joining us today, Joe. I want to give you the chance to maybe share where our audience can stay up to date with you. I know we were sharing your Twitter handle, but if you got anything else that you're cooking up that people should keep an eye out for.
No, Twitter's probably the easiest way to get in touch with me. Again, I'm going to plug again, listen to the excellent roundtable that's going to premiere, I think, tomorrow on the Investors Podcast. It's going to be great. And also, if you have a litigated dispute and you are a Bitcoiner or a Bitcoin company, or I represent a bunch of different Bitcoin miners, that's my day job. About a third of my cases right now are somehow related to Bitcoin. So please, reach out to me through my law firm, Smith Amundsen. I'd love to represent Bitcoiners. I really believe it. It's more than just trying to, have a day job. I actually do believe in helping Bitcoiners. So any litigated disputes, you're being sued, you need to sue someone cheated you out of your Bitcoin, reach out to me through my official channels with the law firm and we can chat. No fee to just chat with me about a dispute. And if I can't help you, I'll point you in the direction of someone that might be able to.
Joe, what is the chart behind you?
This is the Bitcoin chart, and it's from pretty much since I think it goes back to 2014. And my wife actually made it. She was just fooling around with some art stuff, and it was really cool. Shows sort of the long trend, which I use this to sort of keep just perspective. You have this long trend here where it looks like there's nothing but sideways action. Now in here, if you zoomed in, you see a bunch of crazy movement of the price, but you don't. It just all seems flat, right? And then you have this big spike of 2017, and then the other spike. I think this is the you can't probably see it at the end. This is the July of 2019 spike. I use it for perspective because I think it kind of shows that in the long run, a lot of this day-to-day price movement is going to just blend. It's going to look like a flat line when we're cruising north of $500,000-$600,000 Bitcoin. The fact that people are going to say, "Oh, you bought it at 36 versus 34," nobody's going to care. It's going to be irrelevant, right? Like, who cares?
It's all a rounding error, as Greg Foss would say.
Exactly. He's right.
Good stuff. And for those of you
that rounding error, when I did the math over the weekend of like, if I cashed out my bonus when we had gotten it and then just re-put it into the market right then and there, I know smooth brain aspects of me are coming out right now. I get it.
For those of you who are messaging me, no, you cannot actually milk almonds, nor can you milk insects. They do not have teats. That's a bit. You can't get insect milk. If you figure it out, let me know. I'll buy it from you for some Bitcoin.
Keep tuning in because this is a recurring bit for P to push his insect agenda and food onto me.
If you appear on the show enough times, you have to change your name into a letter. Do I need to be J or something? Is that a rule?
Yes.
How does Chris have his real name? I don't get
it. I was here first. I'm the producer, so they're still trying to convert my name to C. So we'll see.
You should do it.
You got to sell the extra letters and convert it into Bitcoin. Otherwise, what are you doing?
You're short Bitcoin. You're short Bitcoin if you don't sell your name. Right?
Joe, next time we have you on, you'll be Jay. But thank you so much for coming on, man. It was an absolute pleasure.
Guys, this was great.
Make sure you're following him.
Yeah, thanks, guys. I really appreciate it, and we will chat soon.
Awesome, guys. We're going to cut to a quick commercial break, and then we will be diving into all this stuff going on in El Salvador. So stay tuned, guys. What is up? We are back, and we are joined by none other than El Presidente himself, coming to you from the sunny beaches of Nashville. P.
That was the biggest buildup of ever. I am the president of Jack and shit. But yeah, man, doing great. Really enjoyed that conversation with Joe. He is a boss, super funny guy, and extremely knowledgeable. But yeah, man, just hanging out, talking shit. Let's I want to dive into it though. What is going on in El Salvador? What is going on with President Bukele?
Dude, it's actually kind of crazy. So I'm gonna my source is this random tweet from Bitcoin Beach saying central bankers from Angola, Armenia, Bangladesh, Burundi, Congo, Costa Rica, Egypt, Gambia, Ghana, India, Namibia, Senegal, Sudan, Uganda, Zambia, 15 countries listed there, 25 others, a total of 44 countries were represented through their central bankers or finance minister one or the other, to sit down with Bukele and talk Bitcoin. Like, has this been helpful for El Salvador? How did you do it? Why the hell did you do it? How much pressure are you getting from the IMF right now? Like, do you have a target on your back? Is the US going to hunt you down? Are the Rothschilds after you? You know, everything in between. And I think it is very, very telling when, and forgive me, guys, I'm going to read 15 different tabs because you have Angola's inflation rate at 29%. You have Armenia's at 7.2, Bangladesh at 5.5. You have Burundi at 7.32, Congo 4.7, Costa Rica, I don't believe that number is only 2.5%. So therefore, I deem it illegitimate. Egypt is over 20%. Gambia is over 6%. Ghana is over 17%. India is 7.5%. Namibia is 4.5%. Senegal says 2%. Sudan is 259%. Uganda is 5%. So ignoring the numbers that don't align with my thesis, and then only paying attention to the numbers that do align with my thesis, it seems like, you know, these countries are looking at, does this actually help with inflation? Like, how are you operating on a day-to-day basis? All it takes is one of these dominoes, one of these people to go back to their country, to their leadership and say, hey, based on what we're dealing with, El Salvador had the same issues, and Bitcoin has helped bank the unbanked in their country. Look at this onboarding rate they have. And if this is one of our goals for this campaign trail, this seems like a route to get there. I think it's fascinating. I think it's telling. I'd love your guys' thoughts on maybe what this could mean overall and like what importance it could have to Bitcoin.
I'll let P go first, and I'll give the contrarian view. I think I'm different than you guys. So
No, I want to hear yours first.
you want me to go?
Yeah.
Okay, so
So I can
my
dunk on
thing.
you.
You want to dunk on me? All right, fair enough. I'll take it. I don't know if this is a good thing or not. So a lot of people are like, oh, central bankers are meeting. They're asking about Bitcoin, but I wonder if they're going to be meeting with him. I mean, Bukele is a dictator. I've never met him in person. I've obviously seen what he's done with Bitcoin. I know Gladstein kind of takes that, you know, he's done some things that are very questionable and very authoritarian dictatorship like in terms of meeting with or like throwing out judges out of the courts and putting in people that he appoints. So it kind of looks like he's setting up to stay long-term as president. I don't know. I can't question one way or the other. I kind of agree with Gladstein the way that it looks, but he's done very good jobs. It looks like adopting Bitcoin as legal tender. I know some Bitcoiners have some issues with the way that he adopted it by forcing people. Bitcoin should always be like a thing that you opt into personally. So some people took a gripe with that when he was like forcing businesses to take it as payment, taxi drivers, whatever it may be. But it's very weird to have a bunch of bankers that we consider as like bad, or, you know, like, I don't think we like, I love the Charlie Munger background there, P. But central bankers that, like, we think of Christina Lagarde, we think of Augustin Carlson's, we think of Jerome Powell. And I don't say they're good or bad people, but normally they're kind of people saying that they're the problem. So I wonder if they are going there to be like, oh, well, you adopted it, but like, how would you stop it? And I don't know. I guess it's very weird that they're meeting in El Salvador with all these banks, but then at the same time, very next week, WEF is meeting. And I'm not saying, you know, they don't have to be mutually exclusive, but it's like, it almost seems like two evil groups plotting to do something against the world. And I don't know, like, maybe it's a ploy to be like, oh, the WEF's trying to push the traditional ways and trying to corrupt people, but are the central bankers trying to do something to corrupt the money or confiscate Bitcoin? I don't know. A lot of people have gripes with Chivo saying it's a government wallet. Yeah, you can obviously use any other wallet, but I don't know. That's just my contrarian view to it. I don't know if it's good or bad. Yeah.
Did you smoke weed for the first time in your life over the weekend?
No, I did not.
All right. Because you just sound like you smoked weed and you're like, wait, but like, isn't this an issue? And isn't this an issue? And isn't this an issue?
Nope. I just think.
Are you accusing Chris of spreading FUD?
I think Chris just went on a FUD rant on Bitcoin Magazine Live.
No. Look, as
all press is good press.
Yeah. Look, I think that Bitcoiners have a long history of raising people up on pedestals, and we get better and better about not doing that, right? when like back in the halcyon days of yore, when Elon Musk announced that he was putting Bitcoin on his balance sheet, everybody lost their minds and were like, biggest Chad ever. Elon Musk is clearly Satoshi Nakamoto. And it was ridiculous. And then he turned out he didn't really know much of anything about Bitcoin. And then he fucked us all. The point is, and like now, you know, like President Bukele is, he has been a significant advocate for Bitcoin. He knows a ton about Bitcoin. But at the end of the day, all President Bukele, all the people you just mentioned, they are doing what serves their own interests. And that is the true beauty of Bitcoin, right? Bitcoin is a system where it doesn't rely on bullshit moral arguments around why something is good or not. Because anytime you try to moralize things, anytime you try to, people start justifying themselves based on what is good for the children or Christmas, or Charlie Munger, who's clearly a dead person that's been reanimated. Look at those fucking eyes. It's going to end in tears. And the thing for me that is so compelling about Bitcoin, again, is that the incentives all align. Each of these individual companies who, whether it's the, Chris, by the way, it sounded like you said the WWF, which I love the idea of the WWF is like one of the shadowy cabals that is like trying to influence global politics and, you know, implement genocide against people using vaccines and things like that. But it's all just noise, and you just have to look at what the incentives are. And as this horrible reanimated corpse is so fond of saying, you know, you show me the incentives, I'll show you the outcome. And so I think that these companies meeting with President Bukele is fantastic. And I think that we don't need to elevate them by being like, oh, these are going to be like the new disciples of Bitcoin. I know that's not what anyone here is saying, but they're going to do what they're going to do. And some of them are going to make choices that benefit Bitcoin and the Bitcoin network, and some of them are not. And those that do not are going to have to learn how to have fun staying poor. And those that do decide to opt into Bitcoin are going to do, you know, are going to be way more successful. But at the end of the day, they're going to do whatever serves their own interests, just as we all do. And that's the beauty of Bitcoin. Me doing what is best for me with regard to Bitcoin serves everyone else. And that's an incredible thing.
I'm curious though, like Chris, why do you think that these two events are correlated anyway? Or like, couldn't it just as easily have been Bukele being like, yo, like fuck the WF, I'm gonna just like host people the week before?
I think we are in tumultuous times. I think many people realize that. When you look at countries as they destabilize or whatever, or regimes overthrown, assassination of dictators in history, there is a power grab at some point. I think a lot of the world with these inflation numbers, which we don't have to argue what the number is, I think it's much higher than what they report. But if Q, and this ties into what you say with like wheat and like feeding, you know, nations, like what's the saying, you know, an army is 3 meals away from a revolt. So like, I think we're getting to that point. And I think there's a bunch of people that have incentives, going back to the incentives model, that they are trying to figure out when shit goes down, not if, when, how do we retain power or get more power? You know, maybe the coincidence of them being a week apart, whatever. But central bankers, Bitcoin puts them out of business. So why are they meeting with Bukele? They should be trying. Are they going to try and take him out there? I mean, I'm not saying that. I'm not trying to say that on live that that's going to occur. But I definitely think they're meeting with him to see the weaknesses of Bitcoin. Maybe they won't find it, but I think that they might ask about the Chivo system. They might ask about government self-custody of Bitcoin for their people. I mean, I think of it as just like an attack vector. It's like, okay, we want to welcome Bitcoin into our economies, but then how do we make sure that it doesn't leave? And yes, that's capital controls. But I think that, like, why did the United States do, the 1602 attack when Roosevelt made everyone give up their gold? And I'm not saying that one way or the other they'll do that, but I think trying to look at how El Salvador rolled it out and then trying a way to capture it is a way to do that. I think the WEF, I lump them in with the Mungers and the Buffetts, that like they're trying to use methodology that was used during World War II. And maybe these are the new wave guys, the younger guys. Bukele is technically a boomer like us, or not a boomer, millennial like us. He's, I think, 37, 36 or something like that. So
P
I don't
is
know.
a different generation. P is, a boomer.
A boomer.
As an 87-year-old man.
As a traditionalist like Charlie Munger. But I don't know. I think my thing is, I think they're trying to look for a way to get more power. I mean, that's what it comes down to. You're a central banker, whether you say it or not, like you're trying to retain power, you're trying to get reelected, you're trying to stay at the head of the money printer. That's just me.
I don't discount what you're saying. It goes back to, I think, P, your forever argument that I really appreciate, which is like, show me the incentive. Like, where is the incentive for these people to like adopt Bitcoin? Well, it's figuring out how to control it and to roll it out in a way that can be controlled. And so therefore they can maintain their power. I just think ultimately, like the Terra Luna stuff is the perfect case study of there will be really stupid, bad ideas brought up on top of Bitcoin and interact with Bitcoin that, unless the market itself dictates that it wants and needs this, those bad ideas will be circumvented. Mining Bitcoin is illegal in China. Transacting Bitcoin is illegal in China. Do you really think there are no miners in China? Do you really think there's no Bitcoin transaction happening in China? So while I do buy this idea that maybe everyone's intention in going in is disingenuous, I don't buy the idea that like there's a hit out on him. Like
yeah,
that.
I don't know. Yeah, wait. No, that would, I mean, I also want to be clear. Like what I'm not saying is like, like everyone is the devil and like, not today, Satan. I'm just saying that we should expect people to do what serves their own interests at all times, whether or not they acknowledge that or try to obfuscate it in, helping the children or orphans or whatever it is. I do think it's super interesting. I think that more than whatever may actually be happening, I think the fact that there is a signal being sent that this meeting is happening, because meetings happen all the time and we never hear about them. I think it's more interesting to ask the question, like, why is this being broadcast publicly? What does Bukele, gain by doing so? What do these other partners gain by doing so? Are they angry that he broadcast this publicly? I think that's a super interesting line of thinking. Not that we're going to be able to come to any conclusions, but what do you think?
I think too, it's like you get these countries that are dealing with issues with their financial systems across the spectrum of like not so much inflation to like really bad inflation. And you've had Bukele now already sit down with Turkey. I've personally been very surprised that Turkey hasn't taken that stance, but also like, let's not beat around the bush. Something as simple as, hey, El Salvador, you're underwater on your Bitcoin buys. Like you are literally like in the red, and every other country that you've talked to has brought this up to you. Like I'm not saying that because I know it for a fact. I say it because I know human beings, and I know if you're giving someone the opportunity to ask any and all questions about this like very risky, if you will, attempt at creating Bitcoin as your sort of nation's currency, one of the questions that's going to be asked in every single one of those meetings is, right, but you're down. Like Bitcoin's worth less right now than all of the times that you bought it. So like, what effect does that have on the way you're able to operate? Are you able to expand? Like, are you able to develop? Are you able to do anything? Or are you really hamstrung in this moment? And I think that answer has not been sufficient enough. Otherwise, every single country Bukele has sat down with would have already adopted Bitcoin. And I think that is maybe the biggest, it's not necessarily the most sexy. It's not the most, for us in Bitcoin, it's not the most logical thing to be the reason why you're holding it back. But for the masses, for the everyday people, and for, in my opinion, politicians, that's where they're looking. And that's, I think, a bigger holdup here. KDP. You're muted, KDP.
Yeah, sorry, I'm trying to change my background to this awesome image that's included in the Bitcoin Magazine article, which is like all the countries that are involved. It's a lot of them. I'll leave it at that. Yeah, I've given up trying to predict exactly what's going to happen with in terms of the nation state adoption of Bitcoin. I think that there's always the sort of public perception game versus the actual reality game. It's going to be a wild ride, that's for sure.
He is so salty about some conference stuff, clearly.
I wanted more announcements.
I love it.
Chris, defend your stance. Like, why do you think that that's the path this is going down?
I mean, you make a great point. We're having a wheat shortage. You keep bringing it up, so I'm trying to tie it in, saying that when countries aren't being fed, they revolt. You're muted right now, so I can't hear a thing you're saying, even though you're ranting.
You want to go wheat shortage? We'll go wheat shortage. We'll go the fact that China literally has like a surplus of wheat holdings. And I'm telling you, wheat is going to very scarily become this thing that people will literally wage wars over. It's going to happen. It's going to be a very scary time. But when you have countries like Sri Lanka dealing with everything going on in that country, and the fact that they're running out of food as each day goes on, and they're not importing new wheat and they're not importing new food, like that is a ticking time bomb in a very small country and a very small example of what is going to continue to be felt as the dominoes fall. Like, yes. Go ahead, Pete.
I was gonna say Sri Lanka is super interesting. I don't know too much about it. I'd be curious if you do, but my understanding is that the wheat shortages or the food shortages that they are experiencing are a direct result of them trying to cater to bullshit ESG narratives. Like they basically, do you know anything about that?
So I'm not well versed enough in that to speak intelligently to it. What I do, however, like the research I was doing that kind of overlap with Sri Lanka, and then as I sort of like see the news and headlines pop up, is just sort of this spectrum that was essentially analyzing different countries and how much wheat they have sort of in reserves in the event that they're not able to import new wheat. And Sri Lanka was literally a country used as an example of 0% of food sort of held in reserves versus the US having like 66%, or 66%. And then like someone like China having 150% of a 1 year's worth of wheat supply. So whether or not that was the result of like trying to hold true to ESG narratives or not, I don't necessarily think is feeding into this idea, though, that you're running out of food, regardless of how you got here. You are here and you need food to feed your citizens. And it's not just Sri Lanka. It's going to be every single country over the course of the next 2 years, maybe. It's going to be very interesting because you have a region of the world that's still under conflict, that so much of the wheat that gets manufactured, shipped, and then sent off to the rest of the world comes from. So,
yeah,
how that has to do with central bankers being set to go kill Bukele, I don't really know.
I think they are, well, I guess there's two ways. So I guess the more optimistic view is they're going down there and they're going to figure out, they're going to shake hands with whatever custodian he uses, whether it's Coinbase or whatever, turn on the money printers and just start wiring them dollars to get more Bitcoin and start pulling off exchanges. But I don't know. I guess they're going down there to see how it's helped his economy. Maybe they're going down there to see if they can retain power. I don't know. Like I said, I'm cautiously optimistic. Let's go.
Guys, all right. To clarify, I am not talking about marijuana.
Mm-hmm.
I'm talking about wheat, like that makes bread.
Of course.
But like actually, because apparently a lot of people threw in the chat that I was not enunciating my T well enough. So my bad. Wheat. Look, I mean, everyone makes fun of me because I'm like, yo, like we're literally running out of wheat and therefore we're running out of food in the world. And then people will be like, but like how much food, like I don't eat wheat, so it doesn't matter. It's like, I don't care what you don't eat. The majority of people eat and get calories from taking in wheat or some sort of carbohydrate. So
You're talking about seed oils.
No, I'm not talking about rapeseed.
No, I'm just fucking with you. All right.
I don't put
All right. I feel like we've mined the Bukele news. We've mined as much as we can.
And I got to bring up wheat, so I'm very happy about that. We can move on to 80K Bitcoin, which I still stand firmly by and say this is noise. I think everything to do with Luna and Terra as it relates to Bitcoin directly is noise and not signal. I do not think that it moved the price. It was coincidence that it happened at the same time that the price made that high around like in the mid to low 40Ks, I believe. And then this sell-off coincides with the most recent lows that we just made. I think it's coincidence. And I think it's more to do with the correlations in the stock market. And
you're talking about short-term price fluctuations, right?
Yeah. Like I get what Joe was talking about with Bitcoin kind of trading in tandem with the VIX, but I also do give credence to the idea that like, hey, a private fund taking their 1% allocation of Bitcoin down to 0.5%, while like that doesn't sound like a big move, you're talking about a fund that probably manages like multi-million dollars. And like, you know, if a 0.5% move is $1 million or 6 figures all of a sudden, and we see a lot of funds consistently doing that, that moves the market in a certain direction. And I think that's more to do with what we're seeing than Do Kwon fucking up.
I agree to disagree. I think it's additive. So the interest rates going up didn't help, but you got to think when shorts unwind or leveraged longs unwind. So obviously 80K Bitcoin, when it was at 39K or 40K, is about a little over $3 billion worth of US dollar nominal amount. When that much Bitcoin's going onto the market, and it's starting to sell to cover the peg for Luna and Terra, that definitely moves the peg one way. And obviously, you know, if you're 100x levered and it starts to unwind, then it jumps down and unwinds the 50x and the 40x and the 25x and, you know, 30, 25, all the way down. And then, you know, obviously it's hard to hit Michael Saylor, who's 1.04x levered, technically, by taking out a 4% loan against his Bitcoin. But I definitely think when you have people that are highly levered in crypto or Bitcoin in general, it starts to unwind. And the thing that's with Bitcoin is Bitcoin's tied to crypto's tied to Bitcoin, Bitcoin's not tied to crypto. So when it starts to unwind in Bitcoin terms, obviously other cryptocurrencies short Bitcoin, and Michael Saylor talks about this, probably doing better justice than I would, but basically talks about everything pegs to Bitcoin, and like they're always trying to kill it and take it down. So when, you know, they're starting to see Bitcoin go down, they take out shorts to try and further push that down. Obviously, and then, you know, with it unwinding, it unwinds Luna and Terra. Then if you had exposure to all these exchanges, you know, Greg Foss says you don't sell what you want to sell, you sell what you can sell. And Bitcoin trades 24/7. It trades more than stocks, more than bonds, more than anything else. So Bitcoin's the freest and open market. You know, who wants to buy, you know, their Luna Terra coin when it's collapsing? No one. So they have to sell the Bitcoin in order to keep the peg. And then also same with other cryptocurrencies, as they're going down, they don't want to sell it, but to prop up their coin, they sell Bitcoin to prop it up. So it's this whole game of unwind. So, but the interest rates going up didn't help. And I think Q, you brought up a great point when we were doing that stream, as Jerome Powell was talking, what was that? Not last Wednesday, the Wednesday before, we watched as the markets kind of went up and then it kind of just proceeded to crash down. And that wasn't just Bitcoin. That was S&P, Dow, NASDAQ, like they all followed that same trend. I don't pay enough attention to the bond markets, but I know that, you know, things are going pretty haywire. Yields are going up. I know that they crossed at one point. I don't know if they've returned the cross of the 2 and the 10. And then I think the 5 and the 30 were crossing or something like that. But I don't look at it. I need
a better way to make, like, I don't have it in front of me to have like literally all of the yields on one chart. that's like constantly updating.
You can make one in TradeView pretty easily, and it's cool. Yeah, Dylan makes them for our Bitcoin Magazine Pro people.
Here's the thing, TradeView, feel free to sponsor the show, because like we use your stuff so much on the show, and like we'd happily have you guys as sponsors, because like I need a pro account because there's so much stuff that like I can't make without a pro account. So TradeView, not a sponsor, sponsor our stuff. I mean,
you and your equities investment shenanigans, Q.
It's interesting because like you're not wrong. Like 80,000 Bitcoin is still a lot of Bitcoin, and that has a material effect on the market. Like overall, like we even saw it in the charts that Sam showed us last week, where it was like, if you take out everything that Do Kwon sold, like the market actually like reads very differently based on on-chain metrics. I'm still just not buying it for whatever reason, though. Like there's something about it that just doesn't feel like it mattered materially as much as it should have. And maybe a part of it too is the fact that, you know, even with this sell-off, Bitcoin is still holding above levels from November of 2020, whereas all the public market indexes, I believe, are all at that level or lower now. So it's starting to like beg this question of, yeah, we sold off, but like we didn't actually sell off as much as like you'd think. It sounds like a lot on some metrics, but on others, when you really zoom out, it's like, oh, we're actually in great shape. And there's another thing that I really don't get to ask guests too often. I think I've already asked you guys this once, but like in no cycle in the past have we seen Bitcoin make a new all-time high and then go back below the high from that previous cycle. So as each day goes on, I have a harder and harder time believing we go anywhere below 20K.
Fair enough. As I always say,
I'm just reading tea leaves and trying to like predict the future with astrology, you know.
I mean, at least you acknowledge it. I mean, for me, I'm like, I'm so much more interested in like the larger, like, let's say like social political movements. Now, I'm not going to deny the price is one of the things. It's one of the strongest signals for people when they're talking about Bitcoin. So I think it is really important to discuss, but ultimately, as someone who used to trade the shit out of futures markets, and did okay doing it, but was up until like 5 a.m. and then, or waking up at 5 a.m. every night, and, you know, never made like a killing so that I would not have to work anymore. It just always feels like noise, but important noise. One thing that I thought
most important noise. It's like, I think we're all on the same page. Like the price doesn't matter, especially denominated in USD. It does not materially matter, but to the masses, to the vast majority of people who do not interact with the network itself, the only thing they're paying attention to is price.
Well, actually, I'll steel man it. I actually think it matters much more than that. I think that, you know, it is it's disingenuous or uninteresting for me to say like, like one, you know, like people love to say like one Bitcoin is one Bitcoin, and that's true. But at the same time, it's like, are you trying to get more Bitcoin? Because if you're trying to get more Bitcoin, then then the price definitely matters, because then you're asking yourself the question of like, you know, would you rather have invested at 69,000, which is an awesome number, or at the current price of 30,000? And if you could somehow see into the future and you had an accurate way of predicting that, then anyone in their right fucking mind would say, I'd rather invest in 30,000, because then you're getting double the Bitcoin. So it's not the price doesn't matter. If for no other reason, then, you know, it's how quickly or how rapidly can you convert things into this thing that we agree, you know, is the soundest money there is, and it matters as much, you know, as we all believe it does. Shifting slightly, one of the things I thought was interesting is I am continually, I don't want to say frustrated. No, I'll say frustrated by like people like, I mean, Novogratz getting the fucking Luna tattoo. Like, what was he thinking? He's gonna regret that. He has other terrible tattoos, but like, oof, like that is its own worst punishment. He has to have Luna on his arm for, I wonder how long before he gets it like removed. I wonder, because if he gets it removed immediately, then people will be like, you rug pulled all these people, you didn't even care. So I feel like he's gonna have like a period of mourning where he wears all black and then has like he cuts out on his sleeve, so you can see the Luna tattoo. Maybe he'll get like little X's for the eyes of the wolf and be like, I'm so sorry, I fucked everyone.
I just think, like, I'm not a superstitious person, but I'm superstitious.
Whatever you're about to say next is going to be some superstitious bullshit. Hit me with it.
Like, yo, he fully, like, if I'm Doquan, I don't even care if I'm not superstitious. I'm calling Novogratz to be like, you fucking jinxed me, you piece of shit cocksucker. And I'm calling, did you just burn $1 bill?
I mean, maybe. These aren't real $100 bills. This is play money. Look closely, my friends.
I
don't trust, verify. But they look real, and it's a funny trick. I was tweeting recently, and I was telling you earlier, I just like kind of like throw these around, and people are like, "Oh my god, never put a number, like don't have your wealth." These are not real $100 bills, people. Look closely. It's bullshit.
I feel like you can get away with spending it somewhere.
I mean,
that's illegal, but go for it.
Yeah. Go ahead, Q. I didn't mean to distract everyone and cut you off from what you were saying.
No, I mean, I was just rambling on like a madman, but maybe this was a good opportunity to remind everyone that ticket prices for Bitcoin 23 are going to go up on Friday. So be sure to get your tickets now before the prices go up. Yeah.
You want to spend 3 of these on a ticket, or 4 of them, or 5 of them even? That's up to you. It's always up to you.
Dibs on the carrot code. Don't take that. Don't take the carrot code, guys. Dibs. I called it. Damn it.
One thing I think is fascinating though is like fucking like Sam Bankman-Fried, man, like fudding Bitcoin, and it's so transparent. Like he is such a piece of garbage. He's fudding Bitcoin for one reason and one reason only. It's because FTX and Sam Bankman-Fried are heavily invested in Solana. Solana is like the most extreme version of centralization. It is a stretch to even call it a quote unquote cryptocurrency. It's basically like, Bitcoin is truly decentralized. Then, Ethereum was created, I would argue, in large part because it allowed VCs and investors to basically play the fiat bullshit games and investment games that they wanted to do in Bitcoin and couldn't. And then, you have all these trade-offs you can make whenever you're talking about quote unquote cryptocurrencies. And Ethereum made a bunch of them. And then fucking Solana is basically like the most extreme version. It's like, what if it cost, like Bitcoin is beautiful because you can run a Bitcoin node. You can independently be your own bank and verify every single transaction in the blockchain for about $100 if you want to. You can set up a node, you can run your own node, you can be supporting the network, you can be validating all your own transactions. Running an Ethereum node, I forget how much it costs these days, but it's like tens of thousands of dollars to run your own Ethereum node. Running a Solana node takes a full fucking data center. It's like millions of dollars to run your own Solana node. Anyway, it's that's why transaction fees are lower on Solana, because they've centralized everything. And that's the way centralized systems work. Decentralized systems are much more robust. They're more resistant to certain types of attacks, the type that everyone in Bitcoin is very focused on preventing. But other systems just do different things. And the thing that kills me is when people try to, it's the whole like, I love Bitcoin, buy my shitcoin. And the reality is they have nothing to do with Bitcoin. They're totally different systems. They are designed to make the people that created them money. They're designed to take the Bitcoin from your hands and put it directly into their pockets, as we saw with fucking Luna and Terra, which is a different thing entirely. But whenever somebody who has a vested financial interest in fudding Bitcoin in order to support their own bullshit project does so, if they're rich, news outlets pick it up and it's like, oh my gosh, this intelligent person said this thing that it was anti-Bitcoin, and no one asks the question, like the structural question of like, why might this person benefit from saying this? It just doesn't get asked in traditional media, and it drives me fucking crazy.
You know why they don't ask, P? Because it's part of their bankroll.
Yeah, I mean,
they're getting paid to show the story, most likely.
Yeah, I mean, it's one of the problems with a lot of media is that you're paid based on eyeballs and clicks. We were talking about this earlier in our internal editorial meeting. We meet once a week and discuss sort of like how we create editorial standards for all the different things that we create as BTC Inc., Bitcoin Magazine, the conference, all that kind of stuff. I'm talking about how difficult it is to measure quality internally, but certainly traditional news media, it's devolved to the point where it's based purely on metrics that are around engagement, and there's very, very rarely, certainly as it relates to Bitcoin and everything related to it, there's just very few outlets that are actually taking the time to actually do the work and understand what's really going on. And then even worse is like a lot of reporters have been prevented from ever owning Bitcoin. So because it would have like a conflict of interest. And that actually has the opposite effect, right? Where if you are someone who has been deprived of Bitcoin and you've like had the opportunity to invest in it since like 2012 or 2015 or whatever it was, you're going to fucking hate Bitcoin, and your entire worldview is going to be based on or sort of warped by the fact that you haven't been allowed to have any. And so you tend to try to justify the fact that you don't by shitting all over it. So that's a weird effect that you see, certainly with a lot of reporters.
And I guess it can take either side. If you have it, does it look like you're shilling it? If you don't have it, does it look like you're hating on it? Like, I guess, and I always found that weird. Like, don't they just have to disclose at the end of the articles if you do own it? Like, hey, like the author has vested interest in this, that, and the other thing. I mean, I don't know.
Yeah, I mean, it's a policy that started in some places. I think the New York Times still does this, where you can't have Bitcoin and report on Bitcoin. But I can understand the original thought behind it, but it's just an outdated and esoteric thing at this point. Anyway, what else we got? I've been ranting. Set some $100 bills on fire.
Q, what do you got?
Sorry, I was staring at the Bitcoin price to just sort of see if we should do a smash buy right now or not.
Yeah, why the fuck not?
Yeah.
Yeah.
Quick little smasher.
Yeah. I want to start doing bets live on this show with you, Q. I want to set up some
Like-
DLC based, some discrete log contract bets, set up some oracles. You down?
What you want to throw on the table?
Only people with more than one letter in their name are allowed to be oracles. So that rolls out both of you guys. And, I can be the ultimate oracle if you need one. So
Chris is getting too comfortable in his producer chair.
Oh God. Yeah, I want to start betting on like the most inane shit. When me and the other people that were first creating PlebNet, I worked with the guys at Shared Bits to DLCs, by the way, for the audience, discrete log contracts. It's a way, God, I'm going to butcher this horribly. I'm not even going to try to define this.
I can give a crack at it because I watched
go
the
for it,
content for it. So discrete log contract is you are trying to determine if this, then that, and a perfect example of that is like if P were to pick the winner of the Super Bowl is going to be from the AFC and Q were to pick the NFC, you'd write a contract, give money to Q if it's AFC, give money to P if it's NFC. I'd probably reverse the thing, but you get the point. If it's heads or tails, give the coin to Q. If it's heads, give it to P if it's tails. And so basically you're trying to set up a way, and a discrete log contract requires oracles to determine what it is. So another example might be the weather. You're gonna use an aggregate of 5 weather channels and you can pick them. And if they say the temperature's below 60 degrees, give money to X. If it's above 60 degrees, give money to Y. And so you're basically trying to set up a condition-based thing, but it requires, since Bitcoin lives digitally, it requires input from the real world in order to like say what's what. Aside from doing like a block height would be the only way to do a discrete log contract, I believe, without having input from the world. So if you say like at block height 800,000, do this and that. Otherwise, it doesn't have time. It doesn't have anything else that can correlate with it. Did I do a good job there?
Yeah, I think that was a good one. I mean, basically, you are forming a smart contract that basically, under certain conditions, redistributes funds. You both like put up a certain number of funds, sats. You make a on-chain transaction, and then basically, based on certain sort of exit conditions or certain conditions at a certain block height, as you said, those funds get redistributed to one address or another, or many addresses. And one thing that's interesting about DLCs, so Taj Draja, who actually was a speaker at Bitcoin 2022. Go check out the video about the panel that I set up with him and a couple other people who are involved in discrete log contracts by searching discrete log contracts on the Bitcoin Magazine YouTube channel. You can see that awesome panel. But he's one of the inventors of discrete log contracts. One of the things that's interesting about discrete log contracts on Bitcoin is that, you know, one of the ever shifting narratives around Ethereum was that it was like the world computer, right? That was the whole thing. People were like, you're going to be able to do everything on the blockchain. That's actually a terrible fucking idea, because blockchain space is very precious, right? Blockchains do not replace databases. They do a very different thing. The whole point of a blockchain is you want to decentralize everything so that no one has to be, or, you know, fewer people have to be trusted explicitly in order to make everything work. And one of the interesting things that discrete log contracts, as implemented by Taj and others, do on Bitcoin is that they actually, the oracles are actually external to the blockchain. That is to say, you, as you said, you set up multiple sources of truth, and you can write that into a smart contract on Bitcoin, where the logic and the actual the sort of conclusion that is derived from those oracles is not stored on the blockchain. And that has a lot of benefits, including, you know, not requiring as much space on the blockchain. Anyway, discrete log contracts are cool. It's kind of one of the bleeding edge things that's happening in Bitcoin. And there's a lot of companies like Itchy Sats is a really cool platform that you can play around with if you are running an Umbrel node. And there's a bunch of other ones. SuredBits is another great company that's doing cool stuff with DLCs, but they allow you, as they mature and develop more, they will allow us to implement some really interesting financial instruments that you see in traditional markets on the Bitcoin, or as part of the Bitcoin ecosystem, in a very novel and secure way. So they're very cool. Point is, I'm gonna make you some bets, Q, Chris. Get ready to lose some sats. We're talking dozens of sats. We're going to be betting on horse racing. We're going to be betting on whose hair is better. We're going to be betting on what color hat will P be wearing when he turns his camera back on. These are all things that we're going to bet on in real time. And to your point, Chris, one of the problems that comes up is something called the Oracle problem, which is like, how do you trust these sources? So if you are the Oracle, then, you know, we're just going to pay you. I will pay you more sats. I'll double the sats to make sure that I win.
Yeah. I think opening bet is, how many teats does a fly have? 16, over under 16 teats for milking, for insect milk. So
yeah,
opening line,
it's
over under.
It's a good question.
Sometimes I really hate you both.
That sounds like a you problem.
Little Q, mini Q.
Nah, I'm fucking with you. I mean, look, you know me. I big better, big gambler. I think micro betting is going to be transformative to the way we interact, both with sports books as well as just the way we watch sports here in America, at least. And I think, for all intents and purposes, right now, processing bets for under $5, it's just not a lucrative business model based on the systems we have in place. But then you introduce the Lightning Network, then you introduce bets for 10 sats at a time.
100.
Then all of us, like, dude, you know how many fucking parlays I would bet if I could bet 10 sats at a time? Are you kidding me?
And that's
like, I'm a degenerate gambler. I know this. The only thing stopping me from like being a full-blown degenerate gambler is that I have an addiction to Bitcoin that I will just like I'll be like, oh fuck, like, I guess I could throw down $100 in this parlay, or I could stack the sats. And like inevitably I do, and I give myself a gambling budget every single year. And in turn, like I go and I win enough fantasy football matchups to like, oh, now I can like play. Like this becomes real play money.
It's a great point. I agree with you, by the way. We've talked about this briefly before, but I think that the Lightning Network and DLCs specifically, and other things that are being built out on Bitcoin, are going to fundamentally transform the gambling world. And I think that's huge. And I think it's one of those interesting things where, we talk about all these things that like Bitcoin fixes, or, the governments are trying to kill you and eat your children and also your genitals by, taking your value, right? But there are things that Bitcoin and the Lightning Network, which is part of Bitcoin, do so much better than existing systems. And international remittances is one of those things that's very popular right now, or it's becoming more and more part of the zeitgeist, as Jack Mallers of Strike talks about. But there are, as you said, significant and material benefits to using a Lightning-based system for something like gambling. Another use case is like micropayments, right? Jack Mallers talks about this, where he's like, yeah, like I'm paying my developers like per minute of work, you're getting sats sent over the Lightning Network, because the transaction fees are so low over on Bitcoin over the Lightning Network that you can actually do that and have it be economically viable. You cannot do that in today's system. It just isn't possible. You're paying fees in order to do that. And so I agree. And I think it's something that's underappreciated by a lot of people with Bitcoin. Like Bitcoin does a lot of things separate from financial freedom, decentralization, lack of trust of third parties. It does certain things, even with all that, so much better than traditional financial systems make possible.
I have a quick thing to add. So that's interesting. I think the DLCs with betting is cool, and I don't know if this problem's been hashed out yet. Maybe P or Q can talk to this. But you guys know that like lines can change. So let's just say, the Patriots are playing the Jets and they're given 7 points, but then for whatever reason, a bunch of starters get hurt and the line changes. So obviously when sports bets are doing a book, they have, I don't want to say capital controls, but like they could wait for more money to flow in from other bets.
Capital controls is the right word.
Is that the right word for it? Yeah. Because like you can't withdraw your money like as soon as you bet it. A lot of times you have to wait 3 days or 5 days or whatever it is. So with Bitcoin,
that's because of the banks.
That is because of the banks. So, but this ties in perfectly. Let's just say the line's +7 for the Patriots to win, and then something happens and the line changes to even, like, so that you're not given 7 points. So a lot of books, they have enough bets, and obviously they're taking 10% of all the bets that are placed, but they could be losing money on a bet. And like Bitcoin, obviously it's final settlement. So the thing that I wonder is if they post, let's say 1 Bitcoin of collateral, and the bets are in and it matches 1 Bitcoin of collateral, but all of a sudden the line changes and a bunch of people bet that it's like they would go bankrupt because there's not enough Bitcoin to settle you see what I'm saying?
Like you're just saying, like, what if everyone took one side of the bet?
Yep, exactly. Like something changes, and like obviously they're trying to update in real time.
Chris, you could ask Vegas how that goes for them for processing millions upon millions of bets every single day.
No, but you're missing my point, because so obviously they're running a sports book on all of these things. I'm saying if like it goes through, it gets set, like it settles and goes to a wallet, like I guess you're basically, there's a risk of custodying it with them. I don't think there's going to be an easy way if it's not just a straight bet. You see what I'm saying? Like let's just,
who's really holding the Bitcoin in the intermediary?
That's the beauty of,
you see what I'm saying? Like if let's just say Q makes a bet for 10 sats, but the reward is technically 1 Bitcoin. Like he takes 37 odds, and yeah, I know it's not likely to hit, or 50 odds, whatever it is. But if in the off chance he does hit, they have to come up with 1 Bitcoin of collateral that they may or may not have to cover that.
That's more likely. Sorry, can I just chime in here?
Yeah, quick? Of course. Go ahead.
Because I think a part of this is, and forgive me if I'm just making this assumption of not using just the betting apps that are presently available, but by current standards, and fair to assume that this would just be practice going forward, you have to deposit a certain amount of money. And then as a result, like you have limits on how much you can bet. Obviously, there are credit lines that you're afforded that come from like a larger pool. But my understanding is that you can't operate a sports book in certain states without like a predetermined number in like your reserves. That's all. There's like a ratio to it where
Yeah.
depending on the number of bets that you list, you need to have like as a result this much money in your accounts in order to pay out. Like those requirements and restrictions would just exist as far as like the quest to make online sports betting more accessible throughout. Like I'm in California and I can't legally bet online. Like
Wait. You guys are still stuck in the fiat system. You're Chris. The whole system that you just sort of laid out is predicated on a massive amount of trust, right?
Mhm.
The break. If I'm understanding you correctly, and I'm not a sports bettor.
Also, just full transparency, Chris, to get a 10 sat to 1 Bitcoin payout, you're looking for odds upwards of like plus 10 million.
Yeah.
Like that's a
yes.
level parlay that you need to get.
No, I know.
Yeah.
And I guess, and sports books cap it at like 15 things you can parlay or 10 things you can parlay. So there's definitely ways to cover it, but there could be a circumstance where a bunch of people pile in and they lose on a trade. And obviously it nets out fine. But if you're expecting final and instant settlement as soon as the bet ends, like that's where it gets weary, I guess.
I mean, I don't expect final instant settlement on every single Bitcoin transaction presently.
Yeah.
Like when I send stuff from Cash App to my wallet, I'm literally sweating for hours because my cheap ass does the like within 24 hours version of this. And my God.
Cash App gets to hold it on their books until they release it. You know what I mean?
Yeah,
like you don't have to, that's why it's like, it may take this long, it may take that long. If you use a fold card and you, when you withdraw from a fold card, the last time it can take like weeks. Like they wait until it's like the lowest possible fee environment. And they tell you this very, very clearly. It's all upfront. And then they basically batch all their transactions at that point. So the thing you're talking about is just custodial risk, which exists in any system. And if you're falling back on relying on like the laws of the land, I want to be reliant on those as little as possible. So, I think that there will I think the sort of the closest permutation, and it's probably already exists. In fact, I'm sure it already exists, is like betting sites that simply allow you to put Bitcoin up, and they use exactly the same risk management software that they use for dollars or for rubies or rubles rather. You can't bet with a sack of rubies online that I know of. To manage that risk. The same thing is true for stocks, right? Like that's why there's all these like crazy like margin calculations, and there's the sort of like SEC standard calculations. And then if you are eligible, you get upgraded to I forget what it's called, but it's like more nuanced margin calculations. But like there are very, very established systems for managing that type of risk. The beauty of something like using DLCs though is that I'm sure that there's a way of doing this. Actually, no, you basically put up the funds that you are betting. So it's like, if I want to give you 1 million to 1 odds, I have to put up 1 million, I have to put up a full Bitcoin to your 10 sats. You know what I mean? Now, I don't think anybody in the right mind would do that, but the way that the simplest form of DLCs is where basically like, you both there's an address and you both lock it into a smart contract where the funds are just committed, and
1 million to 1 odds that tonight Joe Biden says, fuck you, Donald Trump, Bitcoin is legal tender.
I'll take those odds. Let's do this.
All right. So you're putting up the 1 Bitcoin.
The 1 Bitcoin, and I'm going to make 10 sats.
Someone make me a deep fake video real quick.
Oh God.
But no, you're not wrong. There is in our argument a reliance on there's this system in place, or there's just already sort of understood structure. But alas, these are conversations we're having now that, any of you guys out there trying to figure out how to implement your Bitcoin Lightning Network onto your gambling site, we're clearly the experts, so you should call us.
No, go listen to the Bitcoin 2022 DLC panel. Search for it on YouTube in the Bitcoin Magazine YouTube channel. Go follow Chris Stewart. Go follow Taj Draja and learn about DLCs over Lightning on the Bitcoin network.
Sounds good. I guess, P, unless there's anything else.
Sorry, I got all fiery there. You were just making a comment and I was like, no, we know nothing. I know nothing, Jon Snow.
It's fine. I was just trying to show myself out for a job for leverage, but sure, P, thanks. Thanks for that. One day you'll understand. We said it before, we'll say it again. Tickets for Bitcoin 23 are on sale right now. Tickets will go up on Friday, so be sure to lock in these tickets. We're going to be joined by head of marketing for the Bitcoin conference, George, on Wednesday, and he may or may not give us a special announcement. I'm going to just put him on the spot unless he's listening right now. So be sure to tune into that. All other stuff as far as where it's going to be, when, etc., will be announced in June. So we're just a few weeks away from that. You all had to travel to Miami. You're going to travel to wherever it is next year. So buy your tickets at the cheapest prices while they're available. P, Bitcoin 23.
Let's fucking go. It's going to be amazing. Bitcoin
Cool.
2022.
P will be there. You heard it. P's going to be there. Committed already. RSVP locked in. Sorry, I interrupted your rant.
Now, I imagine we'll both be on the news desk. It's going to be fucking dope. We're going to kill it. Be there. There'll be a ball pit. It's going to be 10 times bigger than the last one. I made that up. Don't quote me.
Now I want a ball pit. All right, that's right. And use promo code FOMO, get 10% off of everything at the Bitcoin Magazine store. We'll see you guys tomorrow. And join us for Spaces with Alex Gladstein in like 15 minutes, Chris. Come pop over to Twitter. We're going to be checking in with everyone at the Oslo Freedom Forum, which I was supposed to tell you guys about. Hang on.
I got this. The Oslo Freedom Forum is one of the highest signal Bitcoin events that exist. It is focused on it's so Alex Gladstein, Bitcoin Magazine contributor, amazing human being, is part of the Human Rights Foundation, and the Oslo Freedom Forum is focused on a number of things, but also Bitcoin as freedom tech. And there are just truly amazing conversations. If you want to get a sense for the types, you can search online for Oslo Freedom Forum, and you can see some of the conversations from last year. I can say that many of the conversations that I programmed for Bitcoin 2022 were inspired directly by the conversations from last year's Freedom Forum. So check it out. It is a life-changing experience, and the conversations are amazing. So it's happening very soon. I think the dates are, the 23rd through the 26th?
25th, yeah. And I believe we're streaming all the content here as well on our YouTube channel, Chris. So
most of it, we're doing the Bitcoin content. I'm not sure if we're doing the other stuff as well, but definitely the Bitcoin content.
Fair, but you'll be able to catch some of those talks. Catch us on the Spaces later this afternoon in 15 minutes. You'll be able to hear from Gladstein himself. And of course, if you didn't get a copy of Check Your Financial Privilege, it is available at the Bitcoin Magazine store.
We'll see you soon in Spaces.